Okay, it looks like we're still, there's some latecomers here, so I'll just start. We'll start some chatting here just to get things going. It was a interesting day. There's Tesla on the screen right now. It was an interesting day in the markets. We just exploded in that last hour, and we did some things. I just chat just before we get going into the WaveTech tool and some of the other items that we're going to go through today. I'm sorry, it's very distracting. I have to watch the screen and get people in, so I'm trying to get a little train of thought going. But now I appreciate everybody taking the time. We've been working on a lot of stuff. We're still fixing some things in WaveTech, so be patient with us. And by the time we get through the end of next month, I think we'll have a lot of these items worked out that are happening, and we're just going to get better. And I'm working on. I know there's a lot of fans of the market grid. Folks are making a lot of money on that, and I was just talking to someone a few minutes ago, which is a subscriber, and they were wanting to know how I'm going to get these market grid numbers and other stuff. So this has been somewhat overwhelming. I appreciate everybody that's taken a step, spending a couple bucks, becoming part of this community, and really embracing what we're doing here. And I think it's going to be really exciting. I know it is. And I'm hoping someday that humans get to hang out with other humans, and we'll do a big conference. We'll have a big party somewhere. I'm not sure where. Maybe we'll have to do it in another country the way this place is going. But we'll definitely get together and do a conference. I've done conferences with our institution community for years, and they're a lot of fun. It's a lot of things that we can do when we get a focused multiple hours and get everything organized and all that stuff. So I'm looking forward to that moment in time when we can actually hang out with other humans. I'm not sure we can't now, but I won't get controversial, but it's pretty frustrating what we all see going on this planet. I saw John Bollinger. I follow him on Twitter, and he was going crazy because they're closing the beaches again. And it's unfortunate. I have a friend there that their family does an annual meeting, and now they're not going to be able to do what their family reunion, not going to be able to be on the beach like they always do. So that's really, really a shame, everything that's going on. And it's really disrupting the economy. But you can tell California, Texas, here in Arizona, they're starting some restrictions, and the markets don't care. Remember last week, that's all they cared about. So I'm just waiting for some few people. I'm still letting folks in the room, so just bear with me a few more minutes. We'll just chat for a couple minutes here. But today, we're something I need to do, because we have a lot of new users, and potentially they're on today as well. And the effort that I want to make today is I'm going to review some of the basics again. So it's going to be just a recap of what the software is and isn't, some things that it does, and we're going to dig in and we're going to build some portfolios and show you how easy it is to start to do things. And I'm going to make an announcement here on this call, as we finished our preliminary testing. We now have cryptos coming into WaveTech. I believe there's 100 of them. So I'm excited about that. There's a lot of folks. I love crypto trading myself, so this is going to be fun, and some of them work well, some don't. It's just like stocks. There's some things that we're going to be able to trade with these cryptos. But what's really important is over the next several weeks, we're going to show you how to build crypto portfolios. And most of the folks that we've run into here on this channel have been traders. You're trading Teslas, you're trading different stocks, you're trading S&P and doing some options and stuff. And I'm working on something else. I can't wait till I can tell you what I'm working on, because it's gonna be really cool. I have some interesting friends, and I'm trying to pull them into doing some work with me. And we're working on getting some really solid option strategies to hang around this channel. There's some things that we're working on that is gonna be super exciting. Hello? Yeah, what's going on? Oh, you know why? Because I don't have the mic over there. Got it. Okay, thanks. Bye. Yep. Hey, YouTubers. Yeah, how's that? Sound better? I'm using dual mics. I'm on a headset on Zoom, and now you should be hearing me wonderfully. So give me a shout out if you're hearing me. Sorry, folks, trying to run multi-channels at once is always interesting. But the bringing in cryptos, I think is going to be really cool. I have built some crypto portfolios before, and this is really what I want to start bringing the community and more into the world that I live into, is the world of actually building portfolios, not just traders. And trading's fine, okay, but there's another level of managing money that will help everybody. And my goal, believe it or not, this is my goal, is to help everybody make money. We have to get paid to do what we do, and I'm trying to put things out there really reasonable. We're going to have multiple levels. We're going to have TradeStation working hopefully really soon. I'm kind of really waiting to get that, and that's exciting because my whole background since 1992 has been on TradeStation. And Jay, my son, has actually been working with me since that very first company in 1992, which was called Intelligent Market Analytics and Market Mind. And the core software that is using the core decision process is still involved in all of the things that I've done for 28 years. So as we continue to bring you into this new world we're in, and bring it into portfolio management and showing you how to do things other than just trade, when you can get on the side, if you get enough money. And listen, folks, we're entering the world of fractional trading. So if you don't have a broker dealer, a custodian that can do fractional shares, then get on one that can. I know Robinhood's doing it, but Robinhood, a buddy of mine said it really well the other day. Robinhood does the best of anyone on negative news and making it a positive. They should be out of business after what happened, being shut down for 2 days, but they're not. So loyalty is huge. And the whole fractional share thing that's coming out there is giving you the ability to take parts of your money and actually manage the money. And what I'm going to start to introduce you into is how to do a personal fund. So you can actually build your own personal mutual fund. We actually call it personal funds. If you go through the portfolioexpert.com site, and that's expert without an E. And if you go through that, you'll see some things we talk about, dynamic indexing. We have some really cool stuff we're going to bring out both to the professional and institutional community as well as to the individuals. And we're working on automation of trades off our platform, all kinds of stuff that we're working on right now. And thanks for everybody that has come onto the channel, started to look at what we're starting to distribute out into the community. It's been amazing. So I think this thing's finally stabilized. It's somewhat hectic getting people into this Zoom meeting because of the way they did it. So let's go ahead and, one thing I just want to make a mention, since most of you folks, all of you, I believe, have been watching my channel for a while. It is fascinating to me. I talked there. You will see this all the time. I will talk about numbers being hit, and they get hit. I'll say in the next two, like I said, between now and the end of the week, that we'll probably see 3,100. Well, we saw it the next day, and here we are at 31.29, which I believe was R3 today. But these markets are explosive. You've got to start to get yourself into a place where you can manage your money. You can have your trading account, and now because of fractional shares, it's going to give you the ability to manage your money in a much different way and in a structured way, and that's what I want to introduce you to today. So I'm going to bring up the WaveTech Research tool, and this I am logged in. It has full capability.
Do you hear me? I don't think I have audio.
Yeah.
Now we can hear you. Before, no, but now we can hear you.
Yeah.
Now he's talking on YouTube. You can hear him on YouTube.
Yes, if everyone can watch on Zoom and YouTube, it's some reason the audio is only coming through YouTube.
Well, that would have been nice to know a while ago. How about now? I bet you guys hear me on Zoom.
Yes, I can hear you on Zoom.
Man, I am so sorry. I'm sorry you guys didn't hear that. I turned my mic off I'm trying to run 2 different channels, and I turned off the mic, so you guys haven't heard anything. So I wish somebody would spoke up sooner. Anyway, yeah, so just to kind of recap what I'm doing, what I'm going to do is bring you folks into a way to manage your portfolios, actually manage portfolios, not just be a trader. Trading's fine. So because of fractional shares, we're all going to be able to do some things that we haven't been able to do in the past. And my goals with this whole the channel, which we hit 15,000 subscribers today, which is cool, since this has all been organic. You folks watching what we're doing and being interested, and that's just been it's been really good. It's the internet, so we've got our trolls. Everybody's got them. That's okay. And I've been trying to I've noticed there's some scammers on the channel. I've been blowing those guys out as well when I see them. So we'll try to keep those characters off of the channel. But the goal here for everything I'm doing and what I'm bringing out to a retail community, and I know there's some professionals and institutional folks that are also coming into our network, is we're going to be rolling out a lot of different types of things. So this is not to be a sales pitch, but I want you to know, if you folks on Zoom didn't hear it, we're in a final testing of bringing in all the cryptos into, I think there's 100 cryptos or close to it, bringing them into WaveTech. So you're going to have trading. What I'm going to show you today, not how to build a crypto portfolio, but I am going to show you how we're going to be able to build portfolios, not just trade. So my goal for this community is to have some structured money going on, and you can use the incremental shares. So now you don't have to have millions of dollars to do this. In the past, with our institutional accounts, the individual stock portfolios were $250,000 minimums. Now that's out the door. So we're going to be able to do this. The plan is to 100% automate the trading through our platform, so you can route trades right to your custodians, and they're all built for you. All that stuff is in the plan of what I'm doing here. And this is really exciting because you and I, humans, can only watch so many things at one time, and that's why people just trade an S&P or trade a few indexes and a couple stocks. Well, now we're going to show you how to go into a lot of things to be able to manage a lot of symbols at the same time, and also combine them inside of one equity environment and manage and rebalance and keep everything flowing so that everybody gets a piece of the action, everybody meaning all the constituents in these portfolios. So what I'm going to do here quickly, and I'm sorry for the lag on the Zoom folks getting my mic turned off. I'm using two different mics. That's the problem. So let's just really talk. Those of you the first time on the channel or you joined us, I just want to tell you about the WaveTech tool. This is not the sexiest piece of software out there. It's actually an old piece of software that we've had around. It's our legacy platform, and I've brought this back to life to be able to address the retail community that we've talked about. The goal is to get these 16,635 trading ideas out to you on a short-term and intermediate-term basis and teach you how to actually manage your portfolios as you go on. And hey, Jay, I just want to give you a shout out. If there's anything going on, just let me know as soon as something's going on.
Oh, okay, I hear you.
Yep, thanks. And so those are my goals to bring this technology in there. The goal ultimately, working with a couple potential partners right now, hopefully all this stuff will come together, is to be able to automate where you just take these portfolios, you click OK, and the trades get done for you. It's a robo type environment that we hope to get to. I don't know exactly how long. It might be manual in the beginning. It will be manual in the beginning, and then ultimately 100% automated. There's a bunch of robo advisors out there. They're all jokes. You got Betterment, Wealthfront, all these kind of folks out there. They're basically pie chart investing tools with rebalancing and tax harvesting. They're not doing anything like the technology that we're going to be showing you in the next several weeks. We are also working on the opportunity to bring out a very sophisticated product to you. Our Portfolio Expert product is going to be released, and we're working on a bunch of configurations in the background. So everything, I feel like I'm running a marathon. Those of you that follow the channel, they often ask, when do I sleep? And my joke is, if you ever seen the movie Thank You for Smoking, and Rob Lowe says he's working around the clock, and he goes, Sundays. That's always my answer. I sleep on Sundays, and that's not even true, because Sunday's a big work day. Maybe Saturday's what I should really say. So let's take a look at the product that's on the screen right now. And this product, like I said, is a legacy product, but it has all the signals, the same signals that are coming in some of our other products. But what it's going to do is give you some ideas. And I know last time we did a training, we had a bunch of folks that found some good ideas and were able to profit off some of the signals that came through the system. There's a lot of them. And what I'm just going to walk through real quick is some basics, and then we're going right into the portfolio manager. Okay, so the basics of this platform is there's a research, which I'm on right now, and you can switch from a weekly, which is intermediate trades, to a daily, and it gives you different views, different time periods, a lot of things. I won't go through a lot of the details on this screen at the moment because I want to get into the manager, and we've spent about 20 minutes here just kind of getting up to speed and getting to this point. So I want to get into the crux of what I want to do today. So everything in our portfolios, if you I'm just bringing up DAL, everything has a map on it. Everything is quantified. What the holding periods are, how long it's going to hold, what the average profits are, what the average losses are. So you get a lot of context if you go into a signal and you're looking at it. It also has this rating system at the top. So delta on a daily on this model I brought up is actually really not that good, although there was a pretty good trade that came in on delta. And and I won't go through because there's some videos out there. You can go and watch some of the previous meetings. If you're getting engaged in this product, then you can go back and watch those. And then I will go through, once I get done showing this stuff, we're going to do some Q&A. And the folks that are on the Zoom channel will be able to actually speak. And as you become clients, you should get a Zoom link, so you'll actually have the opportunity to ask questions live. And we've had some great interactions. We actually did a Saturday 3-hour meeting 2 weeks ago, and that was a lot of fun. I don't think any of us wanted to end when we ended. I got tired. I burned out. So, but every chart, every symbol in the database, all 16,665 symbols, have a map. They tell you how well this up here tells you at a glance how well the system does on any symbol. And we have in here mutual funds, ETFs, and individual stocks. So you put up Amazon on a daily. Amazon is only on this particular model I put up it's average, but we did have some nice trades here. It does make some money, but you can go through model results. You can see all the trades. And what I'm about to show you, and Jay sent me a spreadsheet. I hope there it is. I'm opening that up, and I'm going to build some portfolios. But when I do that, I'm going to show you and talk about some of the things that you can do with these portfolios and how to build them. Yeah, I'm just trying to get this thing to open up. But let's go ahead while that's going. Let's just click on the Portfolio Manager. Now, right now, when you folks go there, there's some pre-built stuff in there. Some are good, some are bad from that standpoint. In fact, I just realized I'm just going to log out of here and log into. All right, well, I'll have to use this account, I just realized. Okay. All right, so there's just a lot of the things that you're getting. No, it did log me out. All right, and what I'm going to show you here is what you want to do, the best way to build a portfolio, just to set up, is to have some ideas of what type of stocks you have in there. Since we have 16,000 symbols in here, trying to build something randomly is just going to be just that. It's going to be random. So my suggestion is, if you have a list of stocks or some ideas, I'll bring Jay in and talk about, he's built a lot of what we call motifs and highly styled strategies and how to think about some of those things. But you can take any idea you have, whether it's an industry idea and any of the type of idea you have, and build a constituent list and then put them into the portfolio manager. But before doing that, you should research the symbols. You can go and put in research. There's some steps that you need to do. And I'm going to just go through a couple more things here, and then I'll actually, Jay, get ready, because I'm going to have you come in and just talk about coming up with an idea, some of the stuff that you and I have worked together on, and how folks can be thinking about, how to set this up. So real quick, so it's real simple to build portfolios, by the way, and I'm just going to show you the Create Modify button here. And once you do that, it brings you into a wizard. And there's still little pieces of the old company hanging around. You might see VPM, which stands for Virtual Portfolio Manager. There's some things that are just kind of hanging around this product from our past. But what we can do is, when we go to create portfolio, we can just give it a name. And I'll do this, but I'm just going to put a test. I don't know how many tests I have. I just put a number on it. And so when I do it, I just want you to see this particular step here, is there's a wizard that walks you through every step There's a wizard that walks you through every step in building a portfolio. And it asks you questions, you answer the questions. It actually, on each page here, if I go to next, it's gonna ask different questions so you can do a back test. That's the other thing that's powerful here. This is going to be able to back test. Our database goes back to 1980, January 2nd, I think it is. January 2nd, 1980. So you can actually go in and build portfolios dating back that far. So you can do a long-term test. We automatically set it back 5 years. You'll see it's set at 2015, but you can put your own dates in there. Anything that you want to do, you can actually start to build this, and then as you go through it, we'll just leave it defaulted from the moment. But this is, you can choose how much money you want to start in the account. Like I said, the beauty is, this model still requires you to put enough money in. So if you're going to put in 50 stocks in there, even though you have fractional share capabilities that I talked about a little bit ago, even though you have that, you still want to, this model needs enough money to be able to manage them within that. So you can, if you don't put enough money in, you can actually run out of money in the model. So typically you could even, it doesn't matter, because everything that comes out of this thing when we start delivering ideas to you comes out in percentages. So the plan is, as I mentioned, is to have a fully automated tool, and you're going to be able, it will build, it'll find out, it'll actually go to your custodian, pull in the account that you're running on this, how much money's in there, and then it will just go from that to, so when you bring that in, it'll look at your value, it'll determine exactly how many shares to buy off of the percentage that it's trying to allocate to. But this whole wizard thing just, it steps you through every step of the way on every step. So minimum transaction, I'm not going to do a training course, but a lot of this stuff can be just defaulted. As I said, there's pages here that walk you through ideas and things that you need to know about how to set these things. We used to, in this middle section, I may update this page here sometime soon, but we always told folks, if you're doing, the community that we dealt with in the past has been the advisory community or individual money managers. And we've always went to this moderate 80-20 for individual stocks. We have since, and Jay has actually figured out some really cool stuff on how to make these things even more aggressive, as being aggressive with these models are much better, because what we're going after is returns. And the old world, and dealing with the advisory community, they're more sensitive to the underlying risk. And as it turns out, their sensitivities actually cause more issues with the returns than their risk aversion. Their risk aversion causes problems on both sides. They don't take enough risk and they don't get enough returns. And when you want to make sure you optimize everything that's going on here. So I saw somebody on YouTube saying that it's blurry. Make sure you've set your settings to 1080p. And that might be it. We've seen that happen before, where it's coming through at 720. Okay, so yes, so the wizard is basically the thing that guides you through building his portfolios. So I'm going to go back a couple steps here. Jay, I'm trying to get this spreadsheet open. It won't open.
It's still not opening for you?
No.
Uh-oh.
Hang on. Oh wait, I got it. Just came up finally.
Okay.
Operator error.
Read the manual.
Yeah. So, how many you got here? You got several. Matter of fact, I can bring these up on the screen actually. Let me just bring these over.
Yeah, I was trying to give, as a training purpose, a couple of different scenarios, mix of daily, weekly, some just daily, some weekly, some small portfolios, some large. I was trying to, a little bit of everything.
Hey, thanks for the super chat, Wacky Warrior. Appreciate it. So why don't you go ahead, Jay, and let's talk about this sheet, maybe exactly what you're talking about, and so folks can start to see how to bring a constituent list, and maybe these are all style box stuff as well, like motifs, right?
Yeah, these are the motifs I've been working on.
Okay.
Um, yeah, the Daily Trader was one of the ones I worked on recently. Some of the clients were wanting to just only do dailies, so I had to change my train of thought of just doing weeklies. So I went and researched a bunch of daily stuff that worked really well, and started putting a portfolio together that would hopefully work as like an entry level. This one's actually a little heavy. It's got a lot of symbols in it, but it's again a work in progress. So I will make a few different versions. One will be even less, so you can work with 20,000 to start, 50,000. But I tried this with 50,000 and it worked okay, but clearly with 100 it was cranking pretty good. But
yeah, I think with the fractional shares, since we can't really see that right now, is that it's going to be able, you can set it at 100 and use those values, because the software delivers these trades out 6 digits. So you can go to I don't know how far these folks, it looks like our very first possible relationship is going to be with Interactive Brokers. They seem to have the best platform so far. So it'll be interesting to see how that all plays out from a custodian standpoint. Go ahead, Jay.
So anyway, and on that one, yeah, you can start with 2015. 2015, which we all know was not the greatest year. Clearly this portfolio didn't do very well in 2015, but it rocked on all the other years. But
yeah, so let's go ahead.
Again, I know it's for training.
Let's show them how to build this. And so once you have, and this is what I'm talking about here, folks. I know all of you have a list of stocks that you really like to watch, and if you could watch more stocks, you would, because what will happen here is that you will start to build confidence, and when you build enough symbols in this database, in this manager, because what happens, there's some dynamics, and there, as we roll this out, this is an introductory ideas on how this strategies, how to use this module in the software, and anybody that was with us in the month of June and you're rolling over to the next month, we're grandfathering everybody in, and we're just doing it because the plan was there is going to be an additional charge if you want the management process down the road. So we're just trying to get everybody on this platform and start really rolling out. We appreciate the folks that were willing to come in, and there's things that we're still working on that we won't say broken, but weren't functioning at a high level, and we've built some fans and just trying to get everything going from that standpoint. But so what we're going to do here, Jay, did you use a setting of 1,000? Did you use it defaulted?
Yeah.
Okay.
Yeah, on that one it's just 1,000.
Yeah. And high activity?
Yes.
Okay.
Yeah, high low. Yep.
Yeah, so on this setting, this is what I was showing you folks a minute ago, this high activity, low liquidity. What that means is this modeling process that we're talking about is a demand on capital model. And what it does is when we set it to this high activity, low liquidity, what that means is trying to use 100% of the cash all the time. It wants to be incredibly aggressive with the money and how it's going to allocate. And as the trades come in, it's always going to try to keep the bucket full. Now, if the market rolls over like we saw in February and March, it's going to exit out of these trades and it's going to protect the capital. So all of the buy-sell signals that come out of the WaveTech tool are going to be interacting with the money, with the allocation systems. It's really dynamic. And this product here has some limitations, so we can mix different types of symbols, but we can't put the same symbol in but one. So And another product we have, we can actually do multivariate trading, and this one we cannot. But what it's going to do is manage the money that goes in there. So let's go ahead. We're going to leave it at high liquidity. This page describes all that stuff. As we go into next, average transaction fee, we're going to assume you guys are broker dealers, Robinhood, Charles Schwab, TD, all those guys have zero transaction costs. We're going with that. And over here, now Jay, what'd you do? Do these all daily here?
Correct. Yeah, optimized daily.
Okay. So there's some boxes here. If you want to do intermediate trades, you can put them in this top box and it will find the best symbol. Those who've been around the channel, been on other WaveTech presentations, know that in our database of the 16,600 plus symbols, what we do is we optimize for the best model for the symbols. So we run an optimization twice a year, one in June that just occurred, and then one in December 31st. And what it does is it looks for the best total net profit on the symbol and it matches the model. Now you can actually build models and change it and force it to be on certain models. That's for advanced, and there's times possibly when you want to do that. But in this case, we have, if we just wanted to do all 1.2 models, 3.2, we would drop them on weekly. We'd do it here. In this case, we're going down right here where it says optimize for daily. So you're going to just, I actually went to that spreadsheet. Let me bring that back up real quick. With that spreadsheet, I copied these symbols. And so now when I go back, if I get the right page here, when I get back, I'm just going to paste these symbols into this box right here. And once they're in there, I can go down at the bottom of this. I can't get to the bottom. Oh. So we can go next here, and that's going to add all these symbols in. So you'll see every symbol that came in. You'll see that some of them are matched to D1.2, some are matched to D3.2. So those are the two different models that are out there. And so what's happened is we've applied these. These green buttons tell you that the data is live and that the last day no one, otherwise this is end of day strategy. So yesterday's data is in there, so it's as of the 6/29. Now when the servers run, as those of you who've been watching, you know the servers update. They start updating around, I believe they finish at 8:30, but they start updating around 6:30. It takes about maybe somewhere between an hour and 2 hours to run all the data. We actually run there. We do over 10 million calculations every night on our database and everything that we're going. So we'll be able to build this portfolio, and we're going to instantly get the results of what it's done. Now what did I call this? Test 1, 2, 3. Okay, so we're going to go to next here. These are all green, and we're going to be putting out some training videos on what these buttons mean. These are pretty important. If they're red, that means there's no data in there. So that's a bad thing, and you have to take some action. So next, right now there's got fees. It's okay that we'll just leave this blank. The management fees are going to be 0. This was built for money managers that are charging fees so they could deliver net of fees. And then when we get here, when I click next, what happened, it says initial allocation factor. And what that means is the models just went through all 20 symbols that we put in there, and it calculated what the demand on capital is. This is a demand on capital model. So it's putting 9% in each symbol. So that means that we'll be able to see some stats once we run this model and see how this thing goes. So it says I'm finished with that. I click allocate finish, and hopefully I'll be able to find this thing pretty easily. Here it is. You'll see down below here. This right here is the one I just built, and it's in the allocation queue. I'll just highlight this line so you can see this. In fact, so it'll stay in, if you don't refresh the page, it will stay in allocation queue for the rest of your life or until you log out and come back in. So what you have to do is you just have to, you can click on portfolio access again. It takes about a minute to run these. It's still in the queue. So what happens with our system, once you build a strategy, it will look every minute and then start, as soon as it sees that there's a queue, it will run it. So if there's a lot of users, it will run batches of them. So it could take, what we've already seen in the system is a lot of activity. And I just want to put this out here. If you guys are building this, don't build 50 portfolios because that will drag down the servers. And be a good community member. You know, build 3 or 4 just so you can watch them. Try to keep it down. And if you're not using them, I'll show you how to delete. I'll delete this one when it's done so you can see how to do that, because that will bog it down, because what happens is we have to run all those portfolios you build. So, you know, build what you need to use, but just don't be crazy and build 100 of them. And if you build one and it's crap, just delete it. No problem. So let's refresh this one more time. I hit portfolio access and it should be done now. It is done. Wow. You're not kidding. This thing did well, huh? Is that real?
Yeah, I don't put any slouches out there.
No.
This is good stuff.
Jason, you only made 70, 80% for
Well, I was cringing because 2015 was negative. I didn't want to reveal that, but 2015 wasn't the best year. But yeah, you know.
Yeah. So yeah, this is a pretty insane performance. Yet, you know, those of you know Jay's my son, and he started working on this stuff about, what, 5 years ago? You started working on ideas?
Yeah, I did.
And he's like, he builds his portfolio. I'm like, how the heck do you do that? So he's become like a real master at this stuff. And that's why I want to ultimately, you know, bring him on these, you know, training sessions. I'm hoping that he can do this stuff without me someday here soon and really teach folks how to do this and how to find these constituents. And, you know, this is pretty powerful. February's down 254, March down 6. Shame on you. But yeah, so but
Got to have a little red in there.
yeah, so what it's telling us, there's an order. So this is even good as well. There's an exit on a symbol. But what's going to happen is every day, this is a daily strategy, and what's going to happen is every day you could have orders any day of the week. So all you're doing is coming in here, you log in, and actually on the home page, I've got a lot of stuff. I wish I'd have used a different account on this. But on the home page, it's always going to show you stuff here. I actually was testing some crypt information here and some strategies, but it's going to show you if you had any missing data errors, or if you have a portfolio right here at the top. It says portfolio warnings and errors. It's going to tell you have a portfolio with a order. And so when you build this stuff, it's pretty powerful. But once you build this, it takes only a minute. Now I can go in and I can click on, over on the left-hand side, I can click on the open positions, and this is going to show me when the symbols bought, what their current P&L is, everything that's there. Right now, in this strategy, there's 12.3% in cash, and then you'll see down this column right here. I don't know if it won't let me just highlight. Let me do something here. So I'm just going to draw in some lines. I had to set something up. So this column right here going down in this middle, this is showing me what my current percent of portfolios. So these are allocated in percent. So whatever the value of your account is, if you had 25,000, you're doing incremental shares, it's showing you right now, these are out three, they're just showing you out 3 decimals right now. When the orders come out though, they are to 6 decimal, out to 6 digits from that standpoint. So the other columns to pay attention to, it shows you the last price, it shows you the dollar profit, and it shows you the percent profit. So these lines here, this one is underwater, and we'll look at see who's getting sold out here. We'll look at the orders in a minute, but these are just the open, these are all of the symbols that are currently open and telling you exactly what you should own of each one. So let's go and take a look at orders here. So orders, TRIL is a sell. It's exiting out of that trade. And what it's doing is it's telling you to sell 100% of the strategy. Sometimes you'll get something that's called a reallocation trade, and it may downsize, but it gives you exactly what to buy in percentages on every symbol. And there's pretty simple to figure that out for the most part. When you're looking at most brokers, I know Fidelity has a Fidelity account that you can actually put out those individual, you can put that percentages, you can do percentages or dollar amount. So those are pretty easy to fill. Like I said, we get the fully automated, and hopefully we'll have all the major custodians, broker dealers out there, then you won't even have to worry about that. But I'm going to go back to the open positions for just a minute. And we're going to look at this TRIL. It's down at the bottom here. It was actually a losing trade. I'll highlight it down at the bottom here. It was down 6.68. It wasn't losing a lot. It's only a $6 stock when it came in, but it's now down 8.5%. So it is exiting this trade. And I'll show you something else here. When we go to the summary page, you'll see on this page here, it shows you that there's 20 symbols in this portfolio. There was 13 today. Actually, this order that we're looking at was for the opening price of today. So there's now 12 symbols long, and then it shows we were 87% long, now we're 81%, and our cash, when the servers update tonight, will show 18.41. Markets did pretty well today, so don't expect to see any type of new sells or anything like that come out of that, but who knows? They're all individual stocks, so anything can happen. But this lays out the month to month, every month, the good, the bad, and the ugly, as I always say, of what it's done, what the annual returns are. All of those things are exactly what you want to look at here. I'm just seeing active stocks. This is another page that here's the 20 active stocks. If you ever come over into here and you see it painted in red, that these numbers are all in red, that means there's missing data. So you need to, and we'll be teaching you how to handle those situations. So there's some work that has to be done to maintain these strategies if anything is actually delisted or no longer trading, or there's a symbol change and those kind of things. So there's some actions that you have to maintain in here, but it's usually worth it. You can make some good money on this stuff. And like I said, I'm super excited about the idea of having fractional shares, especially for the retail community. And a lot of folks think fractional shares are people with $5. I look at fractional shares as an opportunity to take some sophisticated strategies and be able to do them with smaller amounts of money. And the advisory community where we've lived for 22 years, that's always been the big thing, having enough money. Well, now that's not a factor anymore. So you can, because of the fractional shares and all of that. And my favorite tagline is, investing used to be for someone, now it's for everyone. And that's why you're seeing the explosion in the community, that the financial community and trading community and everything that's going on right now is because of that statement I just made. And that's going to get more so as these fractional shares come out. Hopefully we get a complete robo trading, being able to do fractional shares and being able to deliver orders. I don't know much about Robinhood right now, but I'm going to be learning about it. I actually have a Robinhood account. I just haven't used it much. But the bottom line is, what we can do is ultimately automate all of these things. Now, there's other things we can look at. Performance, we can compare the performance. We can put SPX on it. That's going to be a joke. The little squiggly black line at the bottom is the S&P, and the blue line is this test nav strategy. But everything is here. There's a trade log. So you can see every trade that was bought and sold. Here's those reallocation trades. All this stuff is right there in complete transparency, and it's going to go all the way back to that 2015 trading. So it's going to take you, actually this goes to 2017. There's so many trades you can't even, it'll only store so many trades. So what you can do, I'll get it back up at the top here. What you can do is you can actually go in and do this trade log CSV file, and you can actually download. I'm in the wrong browser, but you can download the CSV file and get all the details and sort and do anything if you have enough to do. With Excel and be able to do that stuff. So let's go to, so this is that. Let's take a look at symbol returns. This is going to show a return graph of everything that's happened. You can actually any orders you have, you can put in CSV and export them into a custodian for the trade. So there's a number of ways of getting the trades. Like I said, this is an introduction meeting, and there's a lot of stuff to know, but this is going to be really powerful, and just going through the basic wizard of things. I've got some old videos I'm trying to revive so we can put them out so you can see this. But yeah, so let's see what else we got here. Jay, you got anything you want to add?
Not with this particular portfolio. I just want to build another portfolio.
Okay, all right.
And unless you're not ready for that.
No, I don't.
I wanted to show them one of the larger ones so they get an idea, and I believe it's we go back 10 years to give them a real good idea.
Okay, all right. I'll be your eyes and your hands.
Can you, the very last one on the list, Vast Horizons, that's a decent stock. It's got, can't remember if it's 28 or 29 symbols, but it's a good size stock. Sorry.
Is this it?
Right.
Yeah,
Well, that one. Yes.
Sorry to interrupt you guys, but I think it will be very useful if Jay just very, in a simple words and very fast goes over the process, how he goes around to select the stocks in the portfolio, because this is what is really unclear to me.
Okay, yeah, that's fine. We'll do that right now. Thanks. That was Mikhail, right?
Yeah, it was Mikhail.
Yes, it was me.
Well, some of it just were symbols or companies that I'm familiar with, and I just started looking at those. But what I do is I get an idea with each company, and I go through the system. And one of the things I mainly use is the ER rating, which helps to let us know exactly how the system's working with that particular symbol. I also look at the recent trade history to get an idea of what's going on. Some of it's just a certain mix or blend of companies works really well, and it's just something. I mean, I spend hours, I spend days putting these things together, and there's a lot of different calculations, but a lot of it's very simple. You go through and sometimes they don't always work, but it's just sometimes it's time consuming. I use the report builder a lot. That will help to kind of narrow down the range. Usually I try to shoot for an ER rating of 150 or better. It doesn't have to be outstanding, but at least 150 or better. And I just start putting them in, and then as you run it, you just kind of see if there's any symbols that are lagging or dragging the portfolio down, and I'll rerun it again and take out some of those symbols. So sometimes I'll start with 40 symbols, and I'll throw it in a portfolio and just start whittling it down, because you can start to see which ones are really dragging the portfolio down. So, but I will work on more of a detailed account of how I really go through and do this. I just could take a while to try to explain everything.
Yeah.
But, sorry, go ahead.
Is that helpful, Miguel?
So if I understand it correctly, pretty much the same process which we went over in the previous meeting. So like you're still using the VPN tool to do the research and analysis, and then you basically pull your ideas from there.
Yeah, and even if you wanted to go to like use a screener like a portfolio 123 or something like that, or even some of the stuff that's on Yahoo and some of the free stuff out there, you could start doing fundamental screens and then bringing stocks in. You can bring them into watch list or just build portfolios with them, so that so that you can start to test and see what kind of symbols have, like Jay was saying, got good ER ratios, those type of things.
Okay, I got it. Thank you.
Yeah, so I'm just looking at some of the YouTube stuff. Yeah, just something.
Bob, Jay, this is Ram. I had a quick
Ram.
question. So, this kind of raised to one of the earlier questions I saw on the chat as well by somebody else. Is it possible at all to say that I create a virtual portfolio of, say, 20 stocks, but I invest in only 15 at any one point in time, and 5 of them are sort of available if I have cash? Like, one of the questions was, if I exit a position, what's the next one I can pick? And I want a buy signal on one of the others in my potential portfolio, or narrowed down list or something like that.
Yeah, so, okay. Yeah, that's a good question, actually. What we need when you're looking at portfolios and building them like that, one of the things you want to have any of the stocks in a constituent list that you're willing to buy today. And let's say, I kind of look at it like a sports team, right? You've got the folks that are in the game, and then you got the guys on the bench, and you're going to bring the folks in on the bench when they're needed. And sometimes you might have 20 symbols, and it's buying all 20 symbols. So what it does is, in this case, now we're going out of the sports analogy, it's going to reallocate the strategy out so that every piece or constituent can fit into the one pie. On the inverse side, when things starting to roll over, you don't always want to put another stock in there to replace it, because what typically will happen, and you'll see this, you're watching the channel, when I'm going through the database, I talked about how the short-term database got up to 90% long. Well, it dropped back to 68. And that's what I thought would happen. Now it's regenerating new buys. We didn't get a lot of liquidation. So what happens inside of a portfolio, those metrics actually flow in through the portfolios on a very, so for instance, what you'll see is if you had a daily portfolio, it might start to sell down, and you get to that 60 or 70% bullish in a portfolio. And as long as you still like those original stocks, I'd leave them on the bench and bring them back in when the signals come back, and let the reallocation. What tends to happen is there's a rotation of that constituent list. And we have taught for years what you want to do is maybe you might fire the entire team or those 20 stocks that you chose and bring in a whole nother constituent list later. And we're going to show you how to bring that in, Ram, so that you actually, you keep the history of all the old trades, and we're going to show you how to migrate in the new ideas. There's definitely some training that we're going to be doing, and we'll just see. Like I said, I'm excited to do this because this is what we do, and I'm going to put some videos out here pretty soon on how to do the things I'm talking about. Does that answer the question? I think it should, but
yeah. Thanks, Bob. Yes, it does for the most part. The only minor thing there was I was assuming that just say that I'm really interested in 20 stocks, but realistically speaking, I have cash only to invest in maybe 10 at a time or 15 at most, unless I spread myself really thin. So I may have the others as potentials that I can roll into or roll out of, but I'm not invested in everything in my portfolio at any one time. That was kind of how I was thinking about it. But what you're saying is something even more sophisticated, where you can fire a few of those stocks and bring new ones in, and,
Yep.
and have a completely your bench is completely outside my portfolio. So
yeah, you want to refresh those as time goes by. And I've done a couple things, just so you folks know. I've got a strategy, other than some stocks being delisted, that I have since 2005 that I never changed any of the constituent lists with. So I just wanted to see, what if you never did anything and you just stuck with the same list, right? And I can tell you what's happened is just what you'd expect to happen. There were good years and bad years. And there's some really good years and there's some not so good years. And so you do want to, the result of that is you do want to refresh that, and you don't want to refresh it too often. It depends on the methodology of how you're selecting these items and how to rotate them in and out, really. Typically, we try to get you to slow it down to once a quarter, and and the daily models have a lot of noise in them, and we'll probably in a training session, not just introducing this strategy, but we would discuss the advantages of going to a longer term trading module than using just the daily. I know a lot of folks that come in that we met on the internet are short-term traders, and that's all good. But the bottom line is that you have to, I guess the best way to put it, you have to go to maybe the intermediate models to get some longevity, to stay in some of these trades and really make the returns. And I did see a question I want to address. Go ahead, Ram. Is that?
Yeah, I think it's just a matter of how structurally you set it up. But you answered my question basically, because I was originally thinking of just, I have my universe of stocks I'm interested in and just put them all in the portfolio, but I only invest in some of them at a time. Whereas what you're saying is you can have some in your portfolio which are all invested in, some are outside, and then you rotate from time to time. So I think it's the same idea.
Yeah.
You're doing it structurally differently.
Yeah, and I saw something, and I think this is a really valid question as well. I think Christoph asked, if you have a $20,000 account, is it really worth $97 a month? And I do want to address that, and that can be an issue with some of the smaller accounts. You're absolutely right, and with what we're trying to do is adapt the same thing that you folks paid for. A lot of people paid $5,000 and $6,000 for many years. So this is, we're trying to get it scaled. There's a very good possibility that we could have something that would be pre-built only, and you can use that, and you could get those signals if you want to run a smaller portfolio. That was something that would be much more reasonable price. So I think that's a really valid point, Christoph, that you brought up, because it is an issue, and that's then at a $20,000 account, you're spending $1,000, $1,200 a year to manage that money. That's pretty expensive. So, that's actually a really valid point. So most of the stuff probably still pushing just with the cost, it can be an issue. So that's something that I think is worthwhile looking at. So Jay, you want to build this thing?
Absolutely. Yeah, we're ready. And real quick, while you're setting that up, Vast Horizons, the idea behind that was trying to have something that encompasses each sector, something that's not just focused on one or two or even three sectors, but something that's very diverse and maybe adaptive to the different market situations. But I'm still playing with a few ideas on really making it a vast horizon, but it's another one that's in the works. But just one of the ones that's trying to cover all the different bases.
Yeah, I'm just going to put it in as vast HR. So we'll go ahead. Same thing, folks. And this is an intermediate model we're building, right?
Yes, this
How
is
far
all
back are we
weekly.
going?
10 years. We'll do 2010.
Okay.
Let's give them a good idea of really.
Yeah, so this is part of just addressing some of the things that Ron was talking about is when you start, a couple of things happen. You want to start to, when you're managing money you want to give these symbols enough time to actually generate some real money. So the weekly models end up working pretty good. Now we just went through this, we actually saw this year in 2 months, we saw 3 years of price movement. So fortunately, we don't see that very often. So everything right now on the intermediate models are starting to come back into play and starting to normalize. And it's going to take, we've got 4 months roughly since the collapse, and there's going to be more healing time or restructuring time for these patterns to come back into play. But so we're setting this on 2010, and we're just going to hit next. Everything static here, Jay? 1,000. What do you want for equity?
I'm sorry, I forgot I was on mute. Sorry. 300,000 for the beginning equity. Okay. I'm talking and it's giving me an error.
Yeah, you're like me.
Duh.
So we put 300,000 in the account. And once again, if you're doing incremental shares, you could build something like this and run it on a smaller amount of money.
On this one, I was actually running 3,000 for the minimum.
Okay. Yeah. And there'll be a time we'll explain to everybody why. So what are we doing? High activity?
Yes, high activity.
Okay, so we're setting this to be aggressive, and then transaction fee 0, and now we're ready. So I copied them, I think. I got to double check here.
I think you did.
I think I did too, but we'll do it again. So I'm copying those symbols that Jay set up here, and he shows you some of I'm just highlighting the area here on the spreadsheet. It's showing you the inception date, 1/4/210, the money, just the stuff that we're setting up here, 3,000, activity high low, and then transaction fees, all this kind of stuff. Oh, you actually put a fee in there, so. Maybe.
Yeah, I'm still in that institutional advisor mode. Sorry.
Okay, yeah, no problem. Yeah, so folks, this is the other thing is if you are an advisor looking, this is how you can, watching this, this is how you would use this. And we would actually direct you to our institutional platform more so than using this product. But you're welcome to use it, not telling you can't. But the bottom line is that this is the fees, the management fees that are coming out of that. So I copied them. We'll go back and get to work here. So this time, the last time I went down here and put an optimized daily, this time we're going to optimize for the intermediate. And all we have to do is hit next, and it's going to put 29 symbols. There's more symbols. Like I said, the quick check, everything's green, means there's data, 629 last date known. That was yesterday's activity. We go through here and we click next. We're going to leave, I think we're just going to leave this empty here. We'll leave it at monthly. We'll put 0 fees. And now what we're doing, when I click the next button, it is actually calculating the allocation factor. And so what it did is it went through all 29 symbols, looked at what the average long trade per day, and figure out how to make it fit into that 100% pie chart with the idea that it's trying to use as much money all the time as it can. Okay?
And on this one, I actually went with the modified a higher IAF. Do you want to go with the what it's suggesting?
No. Tell me how you did it. You're the
Okay,
master.
0.076
Okay.
is the magic number.
You want to tell us why you did that?
Yeah, because that's the thing. I play around with the numbers. It'll actually reallocate a little more, but
Yeah.
it does make it a little more aggressive, but it also generates more income as it's reallocating the different positions and seeing if there's something that's actually starting to work better, and it'll get out of other positions and start to divert cash into that more promising newer symbol that's
Yeah, so what Jay's talking about here, there's been 2 studies made, and we used to have a CFA that worked in our shop, and in 2010, Brett did a complete review of where did the monies come from, where did the profits come from inside of a portfolio, and my original partner, Dave, which could be listening, I know he watches the channel, he did the same thing, and both of them came up with the same answer, which was 65% of all the profits come from the reallocation model. So there's two major things going on inside of the portfolio manager. One is the buy-sell signals that you folks see from the actual models when it tells you to buy and sell. The other thing that happens is these reallocation cells. We'll show them to you here in a minute. And what they do is they force you to rebalance and otherwise resize trades. And I'll go into a little rant about what those are. So we'll do the 0.76. And the reason why he did that was because he wanted, I got to remember what I called this. He wanted to make that allocation model work a little harder. So there's more trades, but, and I saw, I guess, I'm on live chat. I guess this is YouTube. And Christoph, I think you're in Canada and you're paying a lot of money for Canadian brokers, $5, $10 a trade. And I saw Tobias go, ouch. So, yeah, so those are also issues. And that makes the life a lot harder to be able to do some of this stuff. So let's go down and.
Bob, this is Ram again. Quick question on the initial allocation factor.
Yeah.
If what it computes, I mean, at least the first glance, my impression was that since you're using the aggressive model, it's trying to allocate 100% of your capital. And so then by going even more, like from 0.5 to 0.7, are you going into margin, or I mean,
No, it'll never go on the margin. On our other platform, we actually allow you can actually, for hedge funds and people that want to go on margin, you can. This model itself will never go on margin. So
how do I interpret the 0.05 and 0.07? Because I mentally, just simplistically, I thought it was just dividing all your money across the different things you want to invest in, and so you're 100% allocated.
No, that's great questions. Okay, so and that needs to be clarified. So when that 0.76 number is generated, and when we were in the wizard, I'm going to bring this thing up here right now. It's still in the allocation queue, but it should be finished. It is. What I want to point out is what happens is it's the initial allocation factor. So we start with 100% cash. It's going to do 7.6% tranches of orders until it runs out of money. When it runs out of money, it's going to go and look at the entire list. So this won't be 0.76, but I can do this because I've been doing it for like 20 years. So I can do this little idea. So let's say if you have 2% of your, let's say you got 10 stocks, right? And you're doing a 20% allocation, and that's your initial. So when you get 5 trades on, you're going to be 100% of your money is going to be used, right? When you get the next trade, what's going to happen is going to take 6, basically divide 6 into 100, and it's going to rebalance everything to the new allocation factor. So it's always working on 100% pie. And it also, because it's programmed in, it keeps about a 2% slush fund. So it really works for the most part around a 90, fully invested is around 98%. And the reason why we did that is because we built that in as a model for advisors that were charging 1 to 2%. So there was always monies to pay fees to the advisor for what they're doing. But it works out okay because you always have a little bit of a slush fund even when you're 100%. So if you went to 7, it would actually rebalance. And what it does, the rebalancing, I'll do this, hopefully not to confuse, but what happens is, let's say we have one of the trades that we put on just did amazingly well. We put, going back to my original 20%, and it's growing. Let's say that 20% trade now is 30% of the portfolio because it's done so well. It's overweighted. So when we get that new order and we have no money, it's going to go and it's going to figure out what six into 100 is, and it's going to come up with that factor, and it's going to cut that 30% trade all the way down to that allocation factor, and chances are that's going to be enough. It'll just sell enough to raise money for the new idea. Typically, you'll get 2 or 3 ideas. So the scenario I point, we got five out, and we're 20% allocation. You'd be 100% invested. And now let's say we get the other tranche, we get 10 symbols, we get 5 more. Now it's just going to go linear and everybody's going to get 10%. But what happens is it forces you to sell symbols that have outperformed from the previous allocation factor, from the previous allocation that was done before. So I hope that. So it's very dynamic. It's always looking at the entire pool. It says it knows it can't spend more than 100% of the money. So it's always going to rebalance. If there's more ideas than money, then it sells what has grown, what's the dearest in the portfolio, what's grown the most. It's going to sell that down to the allocation factor until it gets enough money to buy the new ideas. And then it stops selling. And we actually generate exactly that amount. It actually goes through and figures out what the minimum amount have to sell to get that new idea into the portfolio. And I went on for a while. Does that clarify?
Yeah, thanks, Bob. So in continuation of that, if you don't mind my just adding one little thing.
No, please.
Suppose you're like doing dollar averaging, you're investing every month. So what's the sequence in which, let's say, this month I want to add $500 on my paycheck day or whatever, and so I need to add that into the portfolio first and then run it? Or what's the sequence?
No, actually, all you have to do with new money is match the. So let me show you. So let's just go to our open positions. And if you have $500 more, see right here, it's got a 4%. Matter of fact, let's look at something real quick. Let me go to the trade log here real quick. So my guess so there was, in this sequence, you'll see here, there was just these reallocation orders that just came in. So this strategy on 6/15 was just rebalanced, okay? And so everything I was just telling you about, you can see number of shares being sold. It actually shows you the dollar amount, everything. So you would have gotten exactly the amount of shares that you need to sell on a percentage basis, so you know how to do it. So now we go to your new money. All you have to do now is we go back to the open positions page, and you would take your $500 and you would actually just figure out exactly. We actually have a tool for this, and I'll have to research that a little bit. But what you do is you're just going to put 4.6%. Each one of these symbols tells you exactly how much of that 500 that you would allocate out. So it's possible, that it'd be a lot easier. I get this thing automated, so you can just put new dollar amount, go in there, it'll just match the orders. But this is what you'd have to do manually to do that, is you would just match whatever the current open position is by percents of the dollar amount that you're adding. And that'll keep everything exactly in the same balance.
What I was thinking of was that, you're running this once a day, right? So you get
Well, this
an
is
update.
running once a week. This is an
once
intermediate.
a week. So before you run it, if you've increased your pool of cash available, then won't it use the new amount to actually do the
Well,
reallocate? Before it
yeah,
does reallocation?
yeah. So what's happening here is that's the custodial side. What this is the model. So the model will always no matter whatever it says on Monday, listen, whether you got new buys or sells, these are the numbers you match that column, the percent portfolio. I can't highlight vertically, but this percent right here, this column here, that's all you're doing on new money is you're just matching that column. It doesn't have to know more, but your custodian, it's possible if you should be able to, see, we're used to dealing with the advisory community, which has tools where they can just put the new amount in and they can just say, match my current allocation, and it's done. And I don't know what's out there yet on the retail side and whether you can go in and just match your current holdings by a new amount. I'm not sure about that. So that's something I'm glad anybody that's on this call, if you're a customer of ours, just let me know, and I'm glad to work and look at what you're doing to try to figure this out.
Bob, do I understand it correctly that the percentage of portfolio takes the price in consideration, not the amount of shares? So like it's balanced in this way?
It's going to look at actually the amount of, it's going to look at the amount of shares relative to the amount of capital that's in the account. So I think we put 300,000 in this account. So it doesn't matter what the model has in it. You don't have to have the exact dollar amount in this model that you have. This is just these numbers we're looking at here. The percentage portfolio is all you have to match. So you would just match that. Like I said, I don't know a lot of the retail platforms really well. If we had only advisors on here, I could tell you exactly what you need to do. I just don't know what type of screens, but I do know on a Fidelity retail account I have, they will allow me to buy a stock based on percentage, but it's got to be, you've got to have that account that you're running, just segregated for this strategy to be able to do that. And
like TradeStation wouldn't do it because you're good with
they would not.
TradeStation. It wouldn't.
They would not. You're right. But if you were with a typical custodian, Fidelity or TD or Schwab, whatever, they do have those things. But TradeStations, you're absolutely right, is not.
But like my question is actually goes even like further than that, because don't you think that, for example, if you have like a $1 stock and a $150 stock, and if you balance them, I see the numbers are kind of like almost the same, like not to say they're exactly the same, but like the amount is all somewhere rotating around 5%.
Right.
You take a huge portion of $1 stock. I mean, I'm taking extremes, obviously, it could be different numbers, but you take a very huge portion of $1 stock and comparatively small amount of $150 stock. So how does the portfolio goes around that, and like what's the logic behind?
Yeah, so what's going to happen there, Mikhail, you're just going to buy a lot of that $1 stock. You're going to get to that dollar amount, that percent of the portfolio. So you could have, a very large position. This particular one here is showing just the percentages. But if we go over here to the trade log, you'll see.
Like even here, you see that you have like $12 stocks and you have like $250 stocks.
Right. But you can see here, I brought you into this page here. These are the actual dollar amounts for this 300,000 portfolio. That's why we deliver everything in percentages so that you don't have to have the exact modeling amount. It's just a percent. So if you had a $1 stock, it would still be 5% of the total value of the account. It would still be that same number. And that's one of the considerations when you're building these stocks, is to make sure you have highly liquid type stocks that you know are going to trade. You don't want to get too big in any position that it could be a problem. I always say, you know, some of these stocks are like the California hotel. You can check in, but you can't check out. They'll let you buy as much as you want, but you try to get out of them, you'll blow the stock up trying to get out. So yeah, so it's all based on the percentage, and you know we're going to develop this over time. Like I said, this is the goal today was really just to introduce this platform, get some conversation going around it, and we'll figure out exactly timings. And like I said, I'm going to be working on some videos to show you how to actually use this stuff.
But don't you think, like, I mean, it's probably like not a good question to ask, but don't you think that you create some imbalances, like, well, like what you're looking at right now, you have like equally allocated shares, and then you have here like 5,000 and here's like 200,000. And like ERs are different, everything is different.
Yeah,
like,
so these are
just trying to understand how the model works around this.
Yeah, so these right here are partial sales of a larger position. This was these are where we were selling out little pieces of these symbols. If you go down and find this AA when it bought, here it is down here, we bought $188,000 worth of that stock. And when we sold, all we're doing here is we sold 8,000 of that stock because we were raising money for this we were buying Lulu here, okay? And so we were out of cash, so it was...
This is determined automatically, if I understood it correctly.
It is.
How much to sell and
Exactly.
What to buy.
Exactly. And so, and it's taking like some of these symbols, like we were buying 100, we needed to raise 158,000 in this portfolio. At this time, because these reallocation sales happened, what that tells you is we were out of cash. So what the models are telling us, hey, you got to buy Lulu, you got to get some money. So this is how it raised the money through these allocation cells. So sold different pieces. The bigger pieces mean this, like NVIDIA probably had a bigger, these symbols that have the bigger chunks out of them, like here, EA, these must have been growing. These stocks must have been up a lot. And so what happened is we're taking partial profits on some of these stocks that have moved a lot, and we're taking the money off of the table, so to speak, and putting it into Lulu. And then you can see the last two transactions that have happened here, or two sales here, where all of a sudden now we raised, almost $300,000. This portfolio, by the way, and that's something we didn't talk about if we go back
Can
to...
you show like the actual positions with the totals on it or no?
Yeah, so this portfolio grew from $300,000 to $3.3 million. Okay, that's why you're seeing these big numbers here. You see down here, this thing started over here.
Since inception in 2010.
Yeah, so that's why the percentages and understanding these percentage allocations are important. The model itself, the fact that this has 3 million in it doesn't mean anything to you. You can run any amount of money with this from that standpoint. It's all you're doing is matching those percentages, and that's what matters. It's just a model. We started with the model. It's grown. If you started with 2010, you'd be very happy about this. But there's a number of things that when you get into the portfolio environment, to get these returns, to get these things to work like this, you got to do the trades. You can't go, well, I don't know about that one. You got to do all the good, the bad, and the ugly when you get in this environment, and you're rotating. The focus where you and I and anybody using the software comes into play, it's about the symbols, like when Ron was asking questions, like, what's your constituent list? What is it that you're trying to bring into this, into this strategy? So you're just bringing in the stocks, you're updating the team, and you're going to let some guy go up the bat and he's going to strike out. You've got to be able to do that, and so some symbols are going to make money, some are not, and you're going to be able to see all this stuff dynamically. My favorite line when you get into a portfolio, So if you were, this is a mutual fund with 29 stocks in it, is what you're looking at. This is what I talked about early when I started talking, is the personal fund that you're building. So this is so much different than just, hey, let's buy Delta and make it, and then it goes up, sell it. Those are trades. This is still doing trades, but it's doing trades within the context of a pool of money. So now what we're doing is we're actually managing the pool of money. It's about the pool of money, not about the individual stocks anymore. They're important, but there's dynamics that are going to happen. And when I show you these where I go in here and show you the trade log here, these are about all the transactions that happen. So there's a lot of, the reason why Jay was saying when he set this up is that 0.76 caused a lot of these reallocation sells, which caused us to take partial profits on some of these trades when they were going up. So when this craziness, as these markets were bouncing off this low, we were selling, taking partial profits and selling into those patterns as they were unfolding. So we're taking partials and then reinvesting. So you see, like we bought V here, we bought $207,000 of that. But all of these trades below it, this is where we, excuse me, this is where we raised the capital to make that purchase. And then the same thing, you're going to see there's 3 buys up here on 6-8. We bought AA, LNG, and TRN, and then we sold this block right here all the way down to here. I get it to go right here. We sold that entire block of stock to raise money to buy those 3 stocks. So there's a portfolio rotation. So let's pretend we're, a Fidelity fund manager or whoever. We're Ray Dalio, and we got more ideas than we have money. We've got to be able to rebalance, reshuffle the deck to make room for these new ideas while downsizing ideas that already work. So these are things that you and I as a human would be virtually impossible to try to keep up with this. But what it does, this reallocation model, this is why I started talking about this. This is where 65% of the profits come from, doing partial sells, reallocating to new ideas. So the concept is that these are trades that have been on for a while. The AA, LNG, and TRN on this particular block here, those were brand new ideas. You've had enough time to look at like the WaveTech signal. So those are brand new ideas that have new probabilities on what's likely to happen with that symbol. So if you go into the trade profile and individual symbol on this, we could do that. We could take AA and say, well, what is AA's expected to make? Let's do it. I just want to show you how this dynamic works. So we're going to take AA. I'm just going to copy this. We're going to go over to research, and we're going to look at what AA is telling us that it's. We'll just take a look at this symbol, and I'll show you what I'm talking about. So we go to AA. We're going to go to the trade profile here, and the trade profile is going to show us right over here that right now you'll see this very first current trade duration is 16 of 229 days. So this stock is expected to hold for 229 days. The average profit on this trade for 229 days is 27.36%. So if you remember, we bought, I think I'm remembering these numbers, $158,000 of that stock. The average return on that $158,000 is 27.64. Right now, it is showing, it is actually underwater on this thing by 13, and it's actually exceeding some of this stuff. So maybe this thing's it's gonna go through. I don't know what's gonna happen with this, but the bottom line is what's happening is profile is telling us what's likely to happen with that one component. So maybe this is the guy that steps up the plate and strikes out. This might be the winner, might not be. I like the position. I like where it's buying down here at this low, buy low, sell high, right? So this is a tail end of a very long downtrend.
Like
And-
what I noticed by using just the WaveTech itself, that reaching the resistance, or I mean support line, like here it haven't reached it, like it's still at above the support, but some stocks are not being sold even though they are below the support. Like how it works in this sense,
Yeah,
like
so it's looking at a
how it
pattern.
makes
The
decision
support,
to
yeah.
sell.
So that's a big can of worms, and I want to make sure you get that get that answer. But what the models are doing is not just looking at moving averages and support levels. It's looking at configurations, the probabilities of that trend emerging. So it's when we get a buy signal like this one here, and this is a 3-2 buy, and I've talked about this with you folks, is 3-2 has the capability, it can handle a lot of noise. And it's going, as long as certain parameters aren't broken, it's going to hang with this trade. This would be an interesting one, I guess to watch. But and this is obviously a seriously economic sensitive stock, right? It's Alcoa. So it's aluminum. So this it'll be interesting to see if this symbol is going to base here. You can see previous it had two buy signals, and they failed. They bought, it got out, bought, it got out. Now it's buying again. And the last big sale was up here at 50, and the stock is at 10. So it's probably a pretty good place for this stuff to be able to. This is a good place. This is a better place to buy than 30, right? Now it's 10. So from a value standpoint, and Alcoa is probably going to be part of the economy going forward. Who knows if, some of the things that might happen. But you see the PPMs, 2 of the 3 PPMs, they're spiked up. So this is a good trade, but it's not just about support levels. Support doesn't, because it goes below support doesn't mean it's going to sell, because the model is looking at a lot of other factors. We put that up there just for those numbers are up there just so you can see kind of where support levels are in that. But when you're seeing these trades, and that's the other thing here, now we're talking about managing portfolios, and you have a basket of stocks instead of a stock, where when you're looking at one stock and that's all you have, you've got all your marbles in that one basket, everything matters. When you start to diversify and get into a portfolio strategy, now all of a sudden you're going to have some stocks taking away, their trends are evolving, then they start to move up. Maybe the other trend that was moving starts to top out, you're selling out. There's just a whole, if you put a scatter graph up there, you can actually see these things. We do have some things. I'm going to try to open something on the other screen here, and I'll bring this in if I can, if it works. They're somewhat out of dated, but it will help this out. So you kind of getting the picture here a little bit?
Yeah, I do. Thank
Okay,
you.
yeah. So yeah, I'm trying to bring something up to finish this off, because boy, we could spend a lot of time here today going through this stuff. But there's some. Let's see if I want to demonstrate this. I just want to see if I can find one of these. Yeah, I'm going to bring this up on our old website. We've been talking about bringing something in like this, but this, let me just show you exactly what I'm talking about here. Hopefully I can find, yeah, this will be good. I'm going to make this a little bigger so you can see it. So this is a stock strategy that's in there, and what we're seeing here, this is the equity curve of this strategy. These dots here, there's 3 of them: model cells, the reallocation cell, and then we also have another one called a user stop. And those user stops are when we actually updated the constituent list that I talked about from the standpoint of this is what you're seeing here is the actual dynamics of all of the trades that coming in. Now this is a 25 stock environment, and this is going back to 2004. So there's clusters you can see here. The greens are reallocation cells. The histogram below, this is the investment histogram. What you see is when markets start to get weak, you see it build cash. So this is illustrating exactly how this strategy works, how it pushes money into the market when this meter goes to the top, and then when things start to flatten out, you see it pull money out, and then when it gets really serious, then you had an investment exposure over here of 0, and then it just started to build back up till it was back at 99, 100%. And so what this is demonstrating is how this strategy is getting in and out of the market, and it's rotating in and out of the market with the dynamics of these 25 symbols that you're trading. So this is, man, for me guys, this is like the coolest stuff ever, and figuring out how to do this, as it really, what it does is shows you how the money management situation works and how you can balance out risk and all those things. So in between here, in 2009, there was a huge collapse, and this thing will manage those downsides, and this is why I keep showing people how to manage your own funds. And this is one of my big goals here with this community is I want to take folks that I want you to have control and be able to actually manage your portfolio. I see on the YouTube line, I see somebody said portfolio exit for retirement accounts. I appreciate Frank, and that's D. Frank. That's exactly what we're talking about here. This is for real money. This is what we've done. $250 billion have went through this process and continues to go through this process on an institutional level. And this is what I want to bring out to the public. For many years, I said, I'm never going to bring this to the public. It was always behind the scenes. I now want everybody to be able to have this. And when I get this thing automated so you can build this stuff and maybe even do some pre-built, you'll have Jay Kendall, master of the universe, building this stuff. He's very good at this stuff. He's really very impressive. And, we will have that. Some of you will become also Jedi masters at this thing. And we've had a lot of folks that we have out in the institutional community have learned how to do amazing things with this product. But this is actually showing you on the screen the dynamics of running a strategy. This is what, if you were a mutual fund manager, this is what you're doing with this strategy. This is outdated. I'm not sure when the last time it was updated. It's a little bit out of sequence, but I wanted you to be able to see exactly what the dynamics look like inside of the portfolio. And so this stuff is pretty amazing when you start to manage money. You start to, I've tried to promote to a lot of folks that you want to have. You got your trading money, and then you got your serious money. This is for retirement money, for anything that you want to see money grow.
Yes, I can hear you on Zoom. Man, I am so sorry. I'm sorry you guys didn't do that.
So, yeah, Anthony, someone needs to remind Bob that the financial education of the average American is the same or worse as he got in high school. That's pretty funny. I actually think I got a pretty good education in high school. But I went through in the 60s. So, but anyway, yeah, so I think you folks are getting the hang of this, or at least starting to understand. This is, like I said, this was an intro meeting. I think we've had some great interaction here today. And, my day, believe it or not, gets a little short starting about now. I've got a video to make for tonight's action. We saw, today's activity was pretty impressive, to say the least. So let's do one last question.
Well,
Yeah.
I have a question.
Okay, Jason has a question.
This is the answer to some of the questions on the Zoom chat.
Okay.
Can you go back to the year-to-date numbers for Vast Horizons? I know we were starting to get talking about that, but then
And then I went into mad scientist mode.
yes, I was going to say, I almost put that on the chat. Oh, he's in mad scientist mode. Look out.
I am.
Stand back.
Okay. So am I at the right place?
Yeah, there you go. Yeah, down to the monthly, annual.
Yeah.
Vishal was asking about that. Explain a little more, at least get an idea or get the view.
Sounds like you've got the answer.
So yeah, this just goes through. I can't move the mouse, but it starts with the inception date, which is 2010. So we began in January. So yeah, it will actually, yeah, scroll back down just a little, or it's not showing on my. There we go. So, you know, 2010 January. So it goes month to month, and it shows for that full year. And at the bottom, you'll see the annual number, which is 30.59. So each year, it will actually show you month to month how it performed, and then the yearly. Now, what I do get confused, and I need a little help, is does this roll over every year, percentage wise? Mitch is also
that's a mistake somebody would take. It made 30%, then it did 13. Well, it's 30% of the starting equity, and then it rolls over. So on January 1st, whatever the equity is. And in fact, let's do this. Let me show you something. Assemble returns. This, no, not assemble returns. Hang on. History. I guess I might have to bring up the CSV. History CSV. I hate that I'm on this browser because it won't automatically open a CSV. Let me just save this and I'll bring it up. Okay, bear with me. So I'll show exactly what that is. But go ahead and explain.
The returns button, I think, shows actually the actual numbers, no?
Yeah, I want to show something else that's only in that CSV file. Let me. Hang on.
because I didn't want to try to explain it, but then botch up the meaning of it.
Yeah, no, that's fine. Yeah. Yeah, so I'm bringing it up right now, I hope. There it goes. So this is everything that's in there. It took me so long to get this up. I'll get it out. But this shows every transaction and the daily value. So ask the question again, because I'm so far down this trail, I got lost. What we were trying to look at.
You were trying to show the yearly returns, I guess, because they accumulated, as I understood.
Yeah. I'm not sure if I ended up on the right place, but this sheet here, which you can download, shows you the daily values of the portfolio. So as it goes down, it'll grow. This is the actual values of equity. Let me get to the top of this so you can see what the columns are here. So this shows you at the very top, it shows you the cash. We actually calculate interest, which is virtually nothing anymore. And this is the value of the stock. And then this here is trade costs and fees, which we've zeroed out on this strategy. We didn't put anything in there. So this is going to show us what the price of the stock is, what our interest returns are by period. And then this is how much cash is in the portfolio at different times. And you can see if we go back into January, this was somewhat interesting because we had, as we come into January 20th, and this is an individual stock portfolio, the model started selling this year pre-February. You see the cash started to build. It was the cash level was only at 6,000, went to 32, and started climbing. All of a sudden, you got into bigger numbers as we got into early February, and then you can see the money just continued to grow in February. This model was selling during this period of time. And then at some stage, and we come way over here into April, you see when the April turnaround came, this model started, it went from 253,000 in cash on the 26th. On the 29th, it went to 4,000. So it basically deployed a lot of capital right at the 29 low, and that was 6 days off the bottom there on this thing. And you can see then cash levels, and then we've seen some ebbs and flows, some selling coming in late April. And so you can see the dynamics of the cash flowing in and out of the markets here, and the equity values you'll see as well started to climb as this thing went up as well. So this gives you kind of the view of how the money's going in and out of the market. And that also goes to the chart I was just showing you with all the balances. So Jay, I keep hijacking your presentation.
That's okay. I just want to make sure I was explaining it right. But
Yeah.
I mainly wanted to see the yearly return so everyone got an idea of the performance of the portfolio.
Yeah, so but these are all intermediate trades, meaning they trade only once a week when we generate. The orders come out on Monday. So if you were running a pension account or your personal money, whether it's a qualified or non-qualified account, you're really looking at being able to, you only have one data point that you're ever going to deal with on these intermediates. It's Monday morning. Friday night, the servers run. They're going to update the strategies, and it's going to give you all the orders and what to do on Monday morning. And you're done. And you fill the orders, you rebalance it, you wait till next Friday, you come in. Friday, we've always had a lot of folks. You can see the activity after 8:30 Eastern time. You can see the activity in the servers as people come in and looking at their portfolios and stuff like that. So we always have the late Friday night crowd and the early Saturday morning folks. And a lot of these things you can queue up in your custodians before Monday. You just put the orders in. They just happen on Monday. You make sure they reconcile on after the orders are filled, and you go to next. And some of these portfolios, if I went to the trade log on this strategy, you might not have there might be weeks where there's no trades. This is pretty active this year, so I'm just looking at, there's a lot of activity going on.
It is a lot of activity, but also the allocation factor is set higher too, which caused.
So you pressed the envelope, which is
I really did.
yeah. So, but that's the thing, folks. That everybody that's still listening and still on, which we've got a fair amount, is it's about when you get into this is so much different. I doubt that very few people have ever seen anything like this, because I don't know of anything on the marketplace right now, especially in the retail world, that is capable of doing these type of things. And there's a learning curve, and that's part of what we're introducing today. We're gonna have meetings. We're gonna build things. So if you just want to use it, you can use it. We already have a lot of those built as it is right now. I've showed you on our other platform. I'm going to slide that on the screen here, but on this platform here, I've showed you before this WTMV. This is 5 ETFs. It's up 15%. It'll be up better today because we had a nice day in the markets. But this model is only trading 5 ETFs, and this will be ultimately available for people that just want to run money, and you can, for yourself, and you can see, you can go through the years, and when you start to get out to 10 years, this is a global equity strategy, but there's a lot of stuff that you can go to from the standpoint of what the returns look like, and how to manage money and how to get money to grow. So there's two things. There's trading and rock and roll, and then there's money management and the country club. So that's the difference in these strategies from that standpoint. You know, we've got, I know Jay's got, I think I've got it up here. Let me resort this. Probably have the COVID, yeah.
Oh, you're switching over to portfolio expert.
Yeah.
I was answering a question. Sorry.
And that's okay. All right. But anyway, this is the stuff you can do on there. So Jay, I'm really high. I'm going to just have to turn this over to you, Jay, and get off the line. So
Okay.
go ahead. I get you back.
Well, one question I'm getting, and hopefully I convey this right, is they're worried that when the sell or buy order is issued, if you don't place the order at the price that the system is quoting, how does that mess the numbers up, or how do they reconcile the difference?
Yeah. So that's interesting because I see Christoph, since it's done manually, prices will be different. So here's the standard, and we've dealt with literally billions of dollars doing this. So this is not our first rodeo. So we've basically, the goal is for you to buy the opening price, the prices that you see that let me rewind. If you're running a strategy and you get a new buy, your goal is to buy the opening, in this case, a weekly on Monday morning. And if you match that opening price on Monday, that's the same price that the model buys. So you will be matched up. Everybody shouldn't have different prices. Everybody should have similar prices, incredibly similar. And as long as they're in before the opening, the first ticks of the trade of the day will be where you get filled. And you may recall several weeks ago, we had a bunch of buys come out and the market opened lower on that Monday morning. And I was hooping and hollering because that meant we got better pricing on that purchase. So I love when we get intermediate buys and the market comes in super weak on a Monday. That's exactly what I'm looking at. And that is perfect pricing for longer term. You want that downtick when that happens. So basically everybody should own the same prices if you're matching the model. If you're getting a buy signal on a stock, it's telling you on Friday night, buy Monday's opening. Now, if you deviate from that, we've dealt a lot with that, right, Jay? So
yes, we have.
You might be able to get a better trade. That's fine, but the model's going to tell you when to sell that. But most of the time, if you deviate, go, gee, it's open and lower. I think, you end up just causing what's called slippage and deviation, which there's nothing that's going to correct. You would take a really good process and screw it up by not following that Monday morning opening. So this is also the point of not having all your eggs in one basket, is there's going to be a diversified basket. So you might have, like Jay's demonstrated today, like 20 symbols, 29 symbols. So there's going to be a lot of diversity inside of that strategy. So you're not stuck to that one trade. So theoretically, everybody's going to do that. And, I can tell you this, you might think it's better to wait for the first hour. Sometimes it is, and sometimes it's not. And what happens is we have discovered that it's much better, if you're going to follow this model, to follow the model. You buy them on the open, and maybe you can get better prices. But I can tell you, we've seen hundreds of guys screw this thing up trying to do that.
Oh yeah, and they wanted me to fix the books.
Yeah.
What?
We can't fix the books. You just screwed up. You didn't buy it where you're supposed to buy. Maybe you got it better, which is awesome, right? But most of the time, it doesn't work that way. And because now you've going in from a quantitative approach into a discretionary approach, trying to get a better price. One of my very first mentors said this. Guys, hear this. If you hear nothing else I said today, but hear this, is, if you don't follow the process, you aren't doing the process. So you have to be able to match these trades and being able to be quantitative in nature to make this happen. This is different. This is the guy that if you were running a mutual fund, I call it trading by mandate. It tells you exactly what type of balances and things you have to own, and you can't own more of this or that. That's exactly what we're building here in this environment. So you might be able to get better, but that slippage is going to cause you more, because once you make the decision not to do something, let's say the first hour you think, well, I'm going to buy it. Well, sometimes we've seen trades where they just explode. And especially in our institutional market, we might have, we actually have a history. Mitch can always remember what the symbol was on this one. But we absolutely blew up a stock one morning because we had a bunch of advisors on it, and it was a sell order, and the stock opened sharply lower. We were definitely the big seller that day. The good news is it kept going down, so it was a good sell. It didn't just bounce back in our face. But you're gonna, you just got to match the orders.
The problem what I ran in the most part with doing it individually with WaveTech right now is the stocks which gapping up. And remember, like a couple weeks ago, went over the example with X, which gapped up, and the signal was to buy, and I bought it following the signal. So this is the type of probably the exclusions where you don't actually do the trade. You just wait for it to come down, because the model did not take into consideration that.
Well, so let's talk about that, because you're looking at a daily signal. When you get into a weekly signal, that doesn't matter anymore. Because here's the thing. The daily signals have a duration of 35 to 45 days. The weekly signals have a duration of 245 days. So now you're looking at the next year. And if that little gap, if it's a big gap, I agree with you, Mikhail, that absolutely you should consider that. And all you have to do with this is you go in there and we'll show you how to turn the stock off, and the trade never existed in your model. That's easy. Okay. So there's a way to override that and not have it be part of your strategy. But when you stop looking at the next 30 days and you start looking at the next 250, maybe 300 trading days, that if that gap, let's say the stock opens a little higher, it opens $2 higher, you can look at the map, like I told you, on the trade profile on the weekly, and let's say the symbol we were looking at, AA, we're looking at Alcoa. The normal trade, I think it said it was like 27 or 29% return. That $2 is going to be part of it. Maybe it's going to miss out on that. But it actually considers all of those, because all of the trades that has been generated through that model have had gaps lower, gaps higher. Everything's been normalized, and this is when you have a lot of trades coming through here, this stuff gets normalized. And it's also taking it to the next step of having multiple running 20 and 30 stocks inside the same environment is much different. So there's a lot of different dynamics that occur when you're running a portfolio environment versus one symbol. And you're right, and I remember the symbol that you brought up. That was a tough one, and you probably wouldn't buy that. But if you look at the intermediate, maybe there was no buy at all there. But I'm just saying it's the time that you're expected to hold. And I would agree with you 200%. If you're looking at a $35 hold and the stock opens 10% higher, find another idea. But if you're looking at a longer term hold and you know that the average returns are 20, 30, 40% and it opens 5% higher, that's just telling you this is a breakout trade. You go ahead and do them, and you'd be surprised. The other thing that you'll see is, I know most people, because we've run into a lot of short-term traders, are looking at daily models, and the daily models are a lot of noise. There's some good ones and bad ones, and mostly bad ones, because there's so much noise in some of these symbols.
So do I understand it correctly that the portfolio manager is not you can't even try to run the daily models here, or try to diversify, for example?
You can,
30% daily and 70% weekly.
You can, but there's a lot more work. That first portfolio that Jay put together was a daily, so you can, but you got to really find the symbols that trade well, because you'll notice, just like I know you and I've talked before on this chat line with like Delta, right? Well, Delta on a daily symbol doesn't have a very good track record. But the reason why Delta worked is because it got pummeled into nowhere, right? And there was a good trade-off at that low, and we knew it was going to be a good buy trade off of there just because Buffett sold the low and the big seller was one of the big sellers out there was gone, and so that was why that trade worked. But if you look at the model as a whole, that Delta symbol was like a fair kind of, it didn't have a really good rating. So if you go through and find symbols on a daily that have good ratings, you can do that. But when you start, the way that you make really big money is not trading daily, but to trade weekly. So this was what I was going to say a little while ago. One of my mentors used to say that stocks unfold in weeks and months, not days and weeks. Because if you were just trading whatever stock on a very short-term basis, you're getting only that little window of expectation for that stock. So now when you broaden out that expectation to a 200 and 300 day window, now the potential for that stock to move much larger grows substantially. And when that happens, now there's more money in there, but you got to stay the course with these things and ride through these trades. So like I said, one of the things that's happened because of the whole scenario that we've seen this year, basically saying we've got 2 or 3 year price action in 2 months from a range. So what's happening now, a lot of stocks were destroyed and their patterns were destroyed. And what we're seeing now is a healing of the patterns. And it takes, since we're looking at weekly charts, it's going to take weeks and months for those to heal. So when some of these symbols start to come, we've moved up to about 41% bullish in the intermediates. So we're starting to finally see a rotation that's happening. So because of the point in time where we are right now, things are slightly different, but it still looks like to me that these markets are still going to continue to heal themselves. I don't mean that. No pun intended.
But Bob, just one thought, like probably the last one for me, so like the others could participate as well. But for example, like in February, wouldn't it make sense when you see that and it was an expectation? Like for example, I sold all my stocks which I had in like my managed portfolios. I just called the bank and told them I'm not going to sit for that. Right. Like, wouldn't that make also sense to? I understood from your whole presentation that you have a very strong belief in your models, and you don't think it's the right way to intervene based on news, based on market performance, etc. But what's the purpose of looking at ES then, like this daily projection of ES? If you, for example, in some of your and like today you were 100% right. You said it will go to 3,100 and it did well. So like you quite often know based on your experience what is going to happen in the market. And sometimes you miss and sometimes, but most of the part you get it right. So don't you think it will be a right approach to actually intervene, especially on this high volatility and like specific news of COVID, where the models, they don't know this whole thing which we know, like human beings,
Right. No, yeah. So, yeah, it's a couple things. So, it's still the modeling. I was talking to somebody yesterday, and I was basically telling them that these models, this is who Bob Kendall is. This stuff I'm talking to you about is what I believe and what I know, and how I know how to handle the money. And I would argue that the models do know about COVID because they see the prices. And the prices have been erratic. And that's what I'm talking about here is we're seeing a stabilization and a normalization of the database. And I've been through several, this database that you guys are looking at for the first time, I've been staring at every day for 22 years and living and breathing and guiding a lot of money through the markets, institutions and individual money managers. And this is what I do. And this here, bringing you folks into this environment, this is a different mentality. When it comes to trading like that, I agree. There are some times when you want to intervene, But when you start to see stabilization of the database, and that's why I talk about these things on the channel, yeah, and just know that the channel what I've been doing on this channel for the last several months now is what I was doing in written commentary for my customers every day, institutional customers. And so it's the same thing. What I try to do on the channel is just give a perspective of what's happening. You know, I focus in on the S&P and some markets, and that's fun. This stuff here is the serious money, and there's some other considerations and overriding and when you intervene. And for the most part, these things will do really well. And this most recent situation, even then, what I was showing you on some of these stocks, what I was just showing you is that on literally the second week of January of this year, our models were selling all the way into February. By the time February came, a lot of our strategies were already 60% in cash. We were mostly out by the time this thing rolled over. And then we did dump in the first week of March. There were other things that happened, but the models were already detecting there was something wrong with the stocks, how they were acting. So it was ahead of this thing. It wasn't like, oh shit, we've got to get out today. It was actually around 121 is when it got serious, but around 110, 121, 124, there were a lot of selling coming in. And especially the short-term models started to roll even very aggressively as we got into mid-Feb. So I would say that it did a pretty good job. Some of the indexing stuff got whacked, but when you got into individual stocks and this world I brought you folks in today, this is much different. And what it's really showing us is that the individual stock world has a much better dynamic than ETFs and indexing. Indexing is okay with certain types of strategies, but when you're individual stocks, you want to have this ability to rotate and to be able to roll in and out. So yeah, and there are times when it makes sense to override. And chances are, if you're running this thing, we can go into some of this stuff, and you can see here was a big 3-2 tranche on this strategy right here. So it just blew out a lot of stock. You're looking at $140,000 clips. So it probably went to 40% cash on 3-2. And there was even more the following week. But then you can see right in April, this portfolio started to come back in. And then it's been mostly buying since that point. So it's been participating in this rally, moving up, and I forget where the returns are this year. I think
I just don't understand. And I mean, I'm sure you know this much better because you know the code behind it. But I just don't understand how it gets. I understand when it realizes that it's time to exit because they're overvalued or the PPM type of stuff. I just don't understand why it's not getting in, why it's not getting signals. Because right now, for example, it still gets a lot of, it could get, even on the volatile days, it could get a lot of exits, but at the same time, it gets a lot of entries as well. So I don't understand how it was only exiting and not entering for new profits, probably because everything was overvalued. That's why it wasn't.
Yeah. So I mean, so if you look at the database on a short-term basis, this is something I talked about, I think, in the last 2 weeks. My videos all blend together for me. But one of the things I've been talking about is you're going to see a short-term negative rotation while the intermediates start buying. So I'm looking, this page I have up right now was 90% long just a few weeks ago. I told you guys that we're going to go to 68 to 62%, probably on a liquidation, and then it would start to revamp itself. It'd be interesting to see this close at 3,100 today, how many stocks start to come back into play, and see if this database goes up. What typically will happen next, this next rally that we get, if we get one, will fade. We won't get up to 90% long on this. We'll get to 80 82, and then it will fade again. And that'll tell us more about the markets. But when we go to the weekly, this thing was all the way down to 8%. Now it's at 40%. So what it's recognizing is a lot of new patterns that are, this is what I was talking about, is seeing a lot of new patterns come in that are telling us that there's intermediate trends starting to develop. And there's a couple terms out there that make me go crazy. One of them is green shoots, but that's what you're seeing. You're seeing that's what I was talking about. You're seeing a normalization of the database happening, and this is why a lot of folks they want to hear me come on the channel. I probably get 200,000 views if I told everybody the top was in and we're going to zero. But unfortunately, that's not what's happening. And my job is to read this database, and that's what this does.
Do you remember by any chance what was the number in January before the COVID?
Yeah, it was not very robust at all on the daily. It wasn't really
on the weekly.
On a weekly, we
was
were
well above 40%.
It was. Matter of fact,
but not 80. Like
yeah,
it was like 6.
Let me show you something. We'll go to the. Let's go to the dashboard here, and we should be able to see exactly where we were. Okay, so you'll see exactly where a lot of. Now these are the weekly models. Let me just make this full screen. So this histogram right here, this was on 313, and this is what I was talking about. Look at the next bar. We started selling. Now we're at 2-3. This thing just selling. This histogram is showing you we're down to 42%. So we were at 63% coming into this on 113. But that's what I was saying. 121 we sold. The next day 127, 63, 58. It just started blowing out of this thing. As this thing started to roll over, we got a lot more cash. This was just trying to get this to line up. Yeah, so right here is 224. We're already dropping down, 57. And this is what I was trying to talk to you about is when we're looking at the portfolio manager, now we got 20 stocks in there. Chances are that half of your stocks have already been liquidated and you're probably 40 to 60% in cash on 223. And then it continued to sell. And I don't know what the lowest level was that we got to on the individual stocks. It looks like 26%. On the overall database, we actually got down to, I think, 9%. So from there, what we're seeing now is we're seeing this recovery in the database. And probably another place we could look is we could go to the mutual fund, and you'll see mutual funds. This is interesting. If you look where we're 79% there. Look what happened to mutual funds. The market's making new highs. It's selling out of mutual funds left and right. You can see the histogram going down. It was still 69%, but it just plummeted all the way down to 13%. And now what you're seeing, even though the price of the S&P that you're looking at here, you see the mutual fund participation is about where we are on the overall database, around 41%. But it's taken a while for this to happen, and most likely what will happen is it will stay 42, 45, and we got weeks and weeks before this thing is going to grind itself out and there's any kind of further recovery in the markets. And so this is like what I keep telling you guys, I love doing these things. We're a couple hours in already. We have way too much fun, I guess. But the concepts here and things that I'm introducing you to are somewhat not, they're not mainstream. This is mainstream if you're a portfolio manager, understanding the dynamics of the allocations and things. But this is, when we're looking at this database, this is what I've been really bringing in even more into the, into the modeling.
And I was going to ask if before the end, I know we're getting a little late. If we can build one more portfolio that shows how to do both daily and weekly models.
You just want to
Or-
show off, don't you?
I do. I've been burning. You've been talking and yapping, and I can't get a word in.
Next time I'm going to give you control of the screen, and
I'm going to start doing my own shows.
hey, please, they would love it, right, guys? Yeah, no, that would be awesome. You have no idea. You can have this one for this point out, but
There you go.
just a lot of concepts and stuff that I'm trying to bring in. So, what are we going to look at here? We're gonna
Give me a second. Hold on.
wait. I want to get over to. I want to get back to the tool, right? We'll get back to WaveTech.
Correct. We're going to do the first one, the top one on the page on the spreadsheet, which is COVID Crusader Quantum.
All right. Oh, I can't do it here. Hang on. I'm just trying to, I get so many screens. I did get seriously into mad scientist mode there.
You were going for it there.
I was. I get logged back in here again. There we go. Good, Matt.
All right, that looks good.
And now you want the spreadsheet, right?
Yeah, the spreadsheet.
Hang on, I'm just getting rid of this one.
Wrong spreadsheet.
No, I'm just getting rid of that.
No, I'm just kidding.
No, you weren't.
Like, come on, get with it.
All right, what do you want?
Very, very top. COVID Crusader Quantum.
Okay.
Because that's going to mix daily with weeklies.
Okay. So you want me to take them in two separate pieces and we're optimizing?
Yeah, two separate pieces and optimizing.
Okay.
But when you're on there, some of the viewers on Zoom were asking about the optimization on each, and we can show that. And I believe, on the bottom field where it actually optimizes weekly or daily.
Right. Is that how you did this, or did you individually do them?
I actually did do them where I optimized both to see what I got,
right.
And the system chose a few for weekly and then a few for daily.
So we're going to go Portfolio Manager, and we're going to go Create, Modify. And what's this? COVID what? God, I hate that word.
Maybe we'll come up with something better, but it fits the time right now.
I'll just put COVID Cruise. Okay.
Yeah, that's fine. Yeah.
All right, so next, and inception date?
On this one, I went far back. I went to 2010, so January of 2010.
Okay. All right.
And this one was geared for smaller accounts, so I started with 50,000.
Okay.
And this will kind of help them show them, because we on the minimum transaction, you will have to manually put in the 500, because I went with 500.
Okay, right here.
Yeah.
Okay.
And of course, high, low for the activity liquidity.
Got it. All right, so now we got the optimize, right?
Yeah, I believe, you grab the weekly ones first.
So I just pop them in, right?
Right.
All right, so now, folks, what I'm going to do is I'm going to go back to the previous step, and I'm going to go to my spreadsheet, or to Jason's spreadsheet, and I'm going to copy these daily symbols, and copy those, and then I'm going back to, well, doggone it. And I'm going to go back to here, and now I'm going to do optimize daily. I'm going to go down this box and drop them in there, right, Jay?
Yeah,
right?
correct.
Okay.
And if you could, just for training purposes, scroll down a second so they can show. Yeah, at the very bottom, there's the optimize for daily, weekly, or daily.
Yeah, so it'll find the best models regardless of the time increment. Okay, so now we go next. And what you'll see here is there's weekly models and the D is daily. So you see the blended mode here. And
Yeah, I wanted the viewers to be able to see that so that they can tell, yeah, the weekly, it's clearly shown which ones are weekly, which one's daily, so they get an idea what it looks like.
Okay. So now we go next. And we're gonna do 0 out. None of these values matter. So when I click next after this, it's gonna calculate that initial allocation factor. And did you fudge this or did you go?
It's a bit fudged.
Okay.
Remove the 1 and just put like 25. Yeah, do like 5.
25, okay.
Yeah, yeah.
All right.
So it's fudged a little, not tremendously bad, but that was the best number that I could come up with. I tried a few others, but that really was the best performing.
Yeah, that's one of the things, our developer, I've been talking about him for years, that it'd be nice if he could optimize for allocation factor, and that's something we could ultimately do. So here it is, COVID cruise. It's in the allocation queue. Takes about a minute to get this thing queued up and going. And let's just see. I can click on portfolio access. It'll refresh this page. Sometimes when I'm doing screen shares, this thing doesn't want to work right. Like right now. Oh, that's because I can click this OK button at the top. All right. You got to click out that box, or otherwise it blocks it. So now we're going to do portfolio access. It should be run. Nope, not yet.
Not quite yet.
What I'm worried about is we're getting into where it might not even, okay, it's updating stats. So what,
I was going to say, we're getting late in the day. It's going to start running.
Yeah, what happens, folks, and that's actually a good point for those of you hanging out. If you try to build a portfolio when our servers are updating, it's just going to say queued until they run. So you might build something and get ahead of the queue, but it's basically, there's literally like 10,000 portfolios it's going to run every day. So it's going to take a lot of time to run those. So you may be frozen out until after that 8:30 Eastern time. So don't get frustrated. It's just part of the updating process. So now we go back here. We should have it updated now. Here we go, COVID cruise. So we're up 15 on the year. What do you want to look at? You're driving.
I just wanted them to see the stats, but part of it was just to go over the actual construction or building the portfolio so they can see the difference of when you want some of the symbols to be weekly, when you want some of them to be daily, or how to optimize.
Yeah, so but Mikhail, to your point earlier, so you can blend. If you find good symbols, you can have a little bit of both, and that's what Jay's showing here.
Yeah, that's I got it now. That's very helpful.
But yeah, this is one of the portfolios I'm trying to develop for smaller accounts and everything. But as you can see, it's performing pretty well. So even though some of these portfolios are smaller, they only have 9 symbols. There are ways to make them work.
Yeah, and Jay's been the master of these small strategies, or small meaning few number of constituents in them.
Yeah,
he's good with this, folks. I'm just telling you. I don't even mess with this stuff. He's good. But yeah, so this is also a back test to 2010. You can see nice consistency of returns. It's all about stock selection. It's all about having good stocks. It's all about understanding ER ratios and the elements that are in the WaveTech tool. And this is what we hope to do today, and hopefully it does this. And I think it was pretty good because we got this recorded. Excuse me, got it recorded on YouTube, so you can go back and watch this thing, skip through it, and hopefully be able to bring in a lot of perspective, because we covered a lot of interesting things today as far as what's going on. So Jay, do you have any like closing comments you want to make or anything on any of this stuff?
No, other than thank you for everyone watching. But I think that was it. I really just wanted to be able to build that portfolio real quick before the day ended. But I'm very happy now. So,
Okay, good.
but I'm good. I'm good to go.
Well, I'm
I have
glad.
one closing question, which I see that everyone was asking on the chat, is when is actually this will be available to us and whether we're able to subscribe to it right away?
Yeah, it's going to get,
From-
Mikhail, everybody that had a June account is going to get turned on automatically. So everybody that's going forward is going to get that. It'll probably, you know,
Because right now it says that like right now what I could see that I could access your portfolio, but I can't create or
Yeah.
modify mine. So I
So-
don't, we just wait for you.
Yeah, so,
Another.
hey Jay,
Yeah, I'm here.
yeah, go ahead and turn Mikhail and Ram and some of these people on this. Go ahead and turn them on.
Oh,
So,
okay.
He
And
will
one
go,
very last question. I promise it's last one. So we got like in the subscriptions part, I see that we got a bunch of premier portfolios. Like, and for example, even like COVID Crusader Quantum 2 is there. So this is like all the portfolios which you showed in the other program. So like we get most of
yeah,
the
we're gonna
most
clean up,
successful ones.
we're gonna clean up some of those, but yeah, I've been having Jay put some stuff in there. And, you know, on the next level, uh, when you see, I hijacked it already, but when I bring in like the expert software, there's some things that we can do on this platform that are absolutely outrageous. That's the kindergarten stuff that we showed you, but it's good. You can definitely make some money on it. But we can actually we can do some pretty amazing things where you can trade individual stocks. Like I've got Microsoft up here on the screen, and this is just trading Microsoft in and out, but it's trading it daily. It's using a 3-2 monthly, doing a 3-2 daily, and a 1-2 weekly. So it's trading. It's trading. We can actually in this software we can actually put the same stock in multiple times. We can even go even crazier. We could trade Microsoft 1-2-3-2 daily, 1-2-3-2 weekly. I've done all kinds of crazy stuff with this, and it will just it can manage actually one stock. And unfortunately, the WaveTech tool doesn't do that, and we are working on getting this out to the public. And there's actually a whole lot going on behind the scenes right now, and trying to get between TradeStation, excuse me, the grid for the traders. That grid is incredible, and it's incredible on a lot of symbols. So I'm trying to work on getting a lot of this stuff done. It's just a matter of time, and I'm kind of running a marathon right now. But there's a lot of things that you can do with this process. This is I've got this chart that I've got up here right now is another. This one's got some volatility, but we can actually take ETFs and reconstruct them. We can, for the most part, we can make ETFs better than the people that developed them are. And we have a partner that we worked with that have all the constituents. So we can take any ETF, take the individual constituents, rebalance, use their stock picks and all their homework. And we can do this with mutual funds and all types of things. So it's pretty much unlimited what can be done when you get into this, into using this type of technology to trade. And the goal is to automate it. That's what makes it magic.
And from here, we could place the trades like into the broker right away without doing the manual work. Yeah.
Yeah, that's not ready yet. That's what we've got two partners we're working with. We're pretty close, and the plan is on this home button. You'll set up your order, so you'll put your account in. I've got a meeting on Thursday with a group out of New York that we're trying to get the order routing done, and hopefully that'll be a game changer, because then you'll be able to run all this stuff and just automate them. And the goal is to have them so they're 100% automated. You agree, and it just goes, just like on TradeStation has automated trades, same type of thing. And then you can run these strategies, and whether they're pre-built, stuff you built, and they just kind of happen. And the worst case is there might be a manual button you have to agree to put the orders. So you have to look at the constituent list, and then from there you'll be able to blast these orders in. And so nobody's that I'm aware of has given this type of access to basket trading, that's what this is, but they're dynamic baskets that are being traded on multivariant levels, being traded on a different type of modeling process. So I think this is going to be really huge, folks, and that's why I'm trying to work on getting all of the automation out here, because this is going to give the power to the people, so to speak. It's going to give you the ability to run some pretty sophisticated environments. Incremental shares are going to make life very different than what we know it today. And I suspect as we go forward, all the technologies that we're looking at we're going to see leaps and bounds in technology over the next couple of years. And since the trading community has exploded, maybe one day we'll actually watch sports and things again. And it's not just the sports traders, it's just a lot of people sitting at home trying to figure out how to make a living. And, this is exciting. As weird as times are, it's also exciting times for the markets. For me, I've never seen in all my 40 years, it's actually, I actually hate to say it's actually 41 years. I always say 40 years because I'm trying to keep myself young. But a lot of the stuff that we're seeing happening in the marketplace right now is historic, and I believe we're coming into a new era of investing. And that's the whole basis of this dynamic indexing, being able to trade dynamic baskets of stocks, all of those things. So yeah, so that's the first time we've actually done anything like this. I think it's awesome. So I see somebody in Lithuania. Thank you for staying up so late. That's awesome.
Yeah, this has to be able to do this and reach out to everyone and start this community has been more than awesome. It makes me want to cry sometimes. I get teary-eyed when I think about it, but seriously, this is great.
I was talking to Jason's mother, and that's what he said. So it's kind of funny. But listen, man, all you folks, thank you so much. I mean, we've had nice a couple hundred people on YouTube, and we've got a smaller group on the Zoom. But thank you so much for being part of this, and just hang out. We're gonna do some crazy things. I guarantee you. And
thanks to you, I really I think everyone will join. We really do appreciate all that you guys doing, and all those cries and tears are not for. They will go for good. I'm sure. It is a great job that you're doing.
Yeah, no, listen, I've hung around, I think, I won't say, I've got some really good customers, so I don't want to insult anybody, but I've been hanging around the wrong people. You guys are, this community, I think, and it also has a lot to do with, and just kind of closing out, because I've been on this thing since last fall when Charles Schwab disrupted the market in a big way last September when they announced that there was no longer going to be any ticket fees. And I went to the Charles Schwab conference for advisors in San Diego. I guess it was November when I did that. And it was crazy what I saw there. And you could just see that most of these investment advisors are so far behind what's going on in the markets, they couldn't even figure out what was happening around them. It was like, I can't even explain what I was seeing. And it was, what I realized is Schwab has decided to change the world. They disrupted the market back in the 1980s. And I remember being a I started in the markets in '79, and I worked at a major investment house, Wall Street investment house. And I remember thinking how stupid, how funny it was that this discount broker, and they were charging $30 a trade, by the way. And of course, we were charging $150 or whatever. So, but they were always the original disruptor. And when they did that, and then they also 2 weeks later announced they were going to do fractional shares, it was a game changer for the markets. And of course, Robinhood announced they were going to do fractional shares, and they were already bringing in cryptos and all the other stuff. So the world has changed in a lot of ways. And hopefully, after this craziness we've all been through with the governments taking over our personal lives and, everything, being locked down and all that for whatever purpose is really challenged, but it's also going to bring us out. And I said this, those of you that watched the channel for a while, I said this early on, as we will not come out of this situation the same way we went into it. And I think there's a lot of things that are going to be a lot better. I think people have had the opportunity to think through what they were doing in life and how they were doing it. And there's potentially some sanity to come out of this whole situation. So we will have to see, exactly what's going on as we go forward. But from the investment community, the changes in fractional shares, the ability for me to bring out to you folks, this is what motivated me, is that the individual needs to be empowered to the point where they have the same power that these institutions do. And like I said, I'm still doing institutional business, still have institutional clients, and we will continue to do things with them. But this is an opportunity to really show some technology that will do some amazing things for the little guy, if you will. And it was funny, somebody said Bob Kendall's Robin Hood. Huh, that's funny. But there's a lot of excitement that we're going to be able to do. So anyway, I see a lot of nice comments, and we'll see. Yeah, hopefully somebody was talking, I think, Mikhail, I think you're still on. Somebody was talking about you kind of started a group of folks, and everybody wants to get together. So we will, once all this craziness is over, we will have a national conference, and we will all get together and have a party. And we will do some amazing work. We'll do a 2-dayer. Usually what we've done in the past is do a 2-day, and we got main rooms. This is what we've done in the past for the investment advisors. We have a main room presentation. We have breakouts. I'm going to be introducing you folks to some really interesting things as the weeks go on. I've got some pretty exciting things I've been working on to bring a lot of value to the channel and to the community that we're presenting. So so I'm in full out.
I think it will be very useful I remember you were saying it last time or the time before, is you were planning to start a Telegram chat. So I mean, if you want, because I realize that you guys are so busy, so if you need help with that, I mean, I could kind of organize this whole thing, and we could have a Telegram chat where we could exchange during the trading day on what we're doing, and share alerts and calls. I think it will be useful for everyone.
Yeah, no, I appreciate it. I think we will figure that out. We'll reach out to you, Mikhail, because you've been great help. And by the way, I'm working on a manual based on what you're doing. I'm trying to get 2 hours a day working on it, and I got a lot done this weekend.
I was hoping I took that time away from you, but I guess it was
no, it's okay
for taking so much of your time. But it gave you the guidance where to go, at least.
Yeah, and it's funny because it's pretty funny. I have a friend that has another platform that I know real well, and I told him, I said, how many of your users have written you a manual? So, but no, I appreciate it. There's a lot of good stuff there, and I just decided.
I came up with a couple of other useful things over this week by practicing and using it. So I will share it with you. I will finalize them over the weekend, and we'll share it with you too. So you could
Yeah.
take a look at them and give you a judgment.
Yeah, I see somebody's asking about a good entry point on gold. I promise you I will cover gold on the video tonight because my head's not in the markets right now, so I don't like to do ad hoc kind of things, especially on that. But watch the video tonight. I'll take a look at where good entries on gold and some of these other markets are that were out there. So yeah, folks, thanks again for spending all this time, man. Every time we get together, we end up spending 3 hours anymore, but that's okay. I really enjoy this, and there's a lot of knowledge that came out today, and I feel like I said, this community is important to me. It really is. This is like, I know Jay was getting all teary-eyed on you, but you know, it's exciting. You know, I just hope we can take and really build a really nice community. There's a lot here. It has a lot to do with my legacy. I'm an old dude, so you know, I've got a lot to give, and I've got more in my head that's not in the software, and we plan on building this stuff out. So
Thanks a lot, Bob. We've got a lot to learn here too. So.
you know, hey, I love teaching. That I could bring up a list of people that I've mentored. I love this stuff. So this has given me a venue which to do this stuff. So you folks need to know that it's a two-sided deal, you know. And I know like Ray Dalio is out giving back. This is me giving back, but you know, this is a lot more useful than Ray Dalio talking about some abstract thing in his mind. And this is actually stuff that I think can bring a lot of control. One of the things that we have talked about for years, folks, 20 years more, maybe 25 years, is being able to empower people to handle their money better. And I did that through investment advisors for many years, and I plan on continuing to do that. But this is opportunity because of the space and time, right, where we all exist. This opportunity is there. So hopefully we're going to do some magical things. So thanks again. I know I'm kind of I'm in a loop here, but you know, I really appreciate everybody, you know, that's watching. You'll get to hear me again tonight. Watch my video tonight. We'll see what I come up with. I didn't know, I thought we were going to hit 3,100 by the end of the week. It was the next day. So, you know, we'll see where we go. Yeah. Hey, Anthony, I see your question. That's something that is on the other level. It's an old platform. What we got. Yeah, we're gonna. If we get embraced well enough here, folks. This money is going to build a new platform. I've got some crazy ideas. We're working on a lot of stuff. So, yeah, you know.
Hey, Bob.
Yeah,
can you hear me?
I can.
This is Sam. I had a quick question. Are you a John Ehlers fan at all?
I don't know him. John Ehlers?
Yeah.
Yeah, no, I'm a Bob Kendall fan. I'm sorry. You know, that's funny.
Okay.
Let me tell you why. I know of Ehlers. I've had a couple folks that worked with me that were fans, and they were, you know, everything I've done, I have been stuck in this mode since we did work back in 1984. So I don't actually study anybody else's. I read one book, and it's interesting because Elliott Wave International reached out to me, and I'm going to put this out. I have to find where this lady sent the link, but they sent me a link to Bob Prechter's first book on Elliott Wave. That is the only market book I've ever read, period.
Okay.
So everything has been self-taught, getting my ass kicked in the markets, learning the hard way, you know, the school of hard knocks. So I have a PhD in that. But it's really been work I did back in the 80s. This is, you know, I've not changed anything. There's just a lot of strong mathematical basis for everything that we've done. And I just continue to work. So that, you know, I guess that's part of what I want to get out there. I do have 38,000 words written in for a book, and I'm trying that book needs to be on the street, and that's going to just be amazing, just because you get the backstory as well as the how-to. And I'm gonna, you know, I'm really really working hard on trying to get that stuff done. I've got to get a ghostwriter to help me finish it because I just can't get beyond it.
Amazing. Thank you.
You're welcome. All right, folks. Thanks again for watching. We will talk to you tonight. And guess what? Tomorrow's live stream time. So bring all your stocks, anything you got, and we'll just run through everything. I have so much fun doing that. It's a lot of fun. So anyway, have a great evening. We'll talk to you on the videos tonight or whenever you're watching them. Those of you who are up late in Europe, thank you for hanging. And I'll be, so, you know, somebody says, curious, can you do your video earlier by 9 Central? My wife would sure like that. I get home sometimes at 1 in the morning Pacific time, so these videos are coming out late. It's just a matter, I have so many other things I'm doing, and it's just, yeah. Plus, I like to see a little bit of the evening session, get a feel for it. It helps me a lot. So I would like to have them done in an hour from now. It'd be nice. It would help me a lot because I kind of shift sleep throughout the day. So anyway, but yeah, so we'll see you at 9 and 9. I wish 9. We'll see you tonight and then tomorrow on the live stream, and that's at 1:30 Eastern time tomorrow. So have a great time, everybody. Thanks a lot.
Yes, thank you guys. You guys take care. We'll talk soon.